pretty much the entire top 5 IT pack sitting 1% plus lower. So pressure clearly evident there. You're also seeing some pressure on NBFCs, likely because of no repo rate cut coming through. So maybe that part of the market also seeing some pressure. But really, what's standing out is some of the names which are gaining in trade today. Look at the gainers. Asian Paints 2.5% higher, HDFC Life 1.7%, and Trent. Results yet awaited, but 1% higher. So you're seeing some bit of fervor before that result comes through. That's broadly on the index. Let's look at the advanced decline and let's thereafter send it across to Tamanna, who will take care of the broader markets. The advanced declines outstrip advances 3:1, and therefore the pressure is evident, and broader markets therefore likely facing a little bit more heat, Tamanna.
Yeah, broader markets facing heat, and among them IT. I think if you pull up the sectoral heat map, you'll see the pain in IT stocks just keeps deepening. In fact, relatively, I think the market has seen some extent of recovery, but IT and Pharma, healthcare and Pharma, your tariff exposure stocks are seeing the maximum pain. In fact, Nifty Pharma taken a pain for the worse. Add Nifty Realty to that sorrowful list because the clarity that there are no interest cuts coming in has not worked well for the markets this afternoon. But let's look at specific stocks and what's happening there. I want to pull up Bharat Forge after its numbers. Pidilite has just reported, in fact, Pidilite with a net profit of 18.6%. Those numbers flashing on your screen. That's seen a bit of a spike. Revenues up 10.5% at 3,753 crores. You're seeing that as well. So Pidilite is doing okay. Let's go back to Bharat Forge. Bharat Forge, where the statement from the management is talking very clearly of more pain than they have seen for a while. And so you're seeing a bit of a dive that Bharat Forge has taken. Apart from that, I would say, infra space. Look at a transformer and rectifier. Look at a Bosch. Bosch, after numbers, not reacting well at all. Seeing some pain today. Keynes Tech, I would add in the semiconductor hit list. Divi's Lab also after numbers not doing well at all. So you're seeing a lot of numbers impact, which is why the Nifty Pharma is also down. CCL Products, I will add to the list of companies who've not reported a great set of numbers, or at least not managed to enthuse the street for what it's worth. On the other end of the spectrum, of Godfrey Phillips, it has been on a 10% circuit since this morning, and that has been seeing some excitement coming in. Even an IFL Finance has seen some excitement coming in, as has Waaree Energies. Reliance Power, a complete turnaround there from a 5% circuit down to a 5% circuit up this afternoon in trade, even as questioning has continued, but this time of those close to Anil Ambani by the Enforcement Directorate. So those are some of the movers. Sarda Energy continues to be a sizzler for, I think, the second or third day in a row. But let me go across to Kush Bora, founder of kushbora.com, for his afternoon take on the index. Kush, at least a bit of a recovery that we've seen on the Nifty, if there's anything to go by and take heart from.
Sure. Hi, Tamanna. First of all, very good afternoon to you and to all the viewers. Recovery, yes, but also take heart from the fact that Friday's low of 24,535 has been protected, not just today, for the last two sessions as well. So I think near-term supports are intact. 24,400, 24,500, that zone, that medium-term support zone is still very much intact. What's causing trouble, and I think you've covered that in a fair bit of detail in the show just before this one, is the uncertainty around the tariffs and everything else that's going on. FII is at 92% short, is far too high for anyone's comfort, even theirs, I suppose. I think the market lacks a positive trigger, and hence you're not seeing an upside. So as I said, even the Friday's low that is being protected is a sign that the market doesn't really want to slip to much lower levels from here on, having slipped already to some overstretched territories on the downside. So the only way to play this market, or rather the two ways, are: one, you either sit this one out till there's some more clarity, or you wait and you play for a rebound trade as and when that comes about. So I wouldn't go short on this market, close to support zones, slightly overstretched on the downside. You might want to consider a rebound trade for levels of 24,800, 25,000. The only thing is you don't want to preempt it. Let just market rebound, give you a green tick, and then perhaps with the stop losses near the...
Kush, I'm sorry, I'm going to have to cut across. We have Gopal Vittal, Bharti Airtel speaking on that conference call. Let's cut across.
We further strengthened our entertainment experience for our prepaid customers by launching an industry-first all-in-one OTT entertainment pack with access to over 25 OTT platforms. I do want to reiterate that feature phone to smartphone upgrades, prepaid to postpaid upgrades, data monetization, and international roaming continue to be central to our ARPU growth in the absence of any tariff repair. Our 5G expansion continues as planned. We ended the quarter with 152 million 5G customers. We continue to believe that 5G handset adoption at the bottom end of the market will accelerate with the launch of more affordable options. 5G shipments continue to grow and now account for 86% of total smartphone shipments. Our share in the 5G shipment is constantly growing. 5G sites already cater to 36% of the total network traffic, enabling some traffic offload from the existing 4G sites as well. In the broadband business, we delivered a solid quarter with the highest ever quarterly net adds of 939,000. We're seeing strong momentum in FWA net adds of 5.4 lakh. I believe this momentum on the overall broadband business should continue to see acceleration. In digital TV, we lost around 2 lakh customers during the quarter, while the decline was somewhat compensated by the step up in IPTV net adds. DTH net adds were impacted by structural changes that we initiated to eliminate subsidies on the set-top box. We believe this move will pay off well with very strong cash generation. The competition has also followed us and reduced the box subsidies. Our IPTV is seeing strong acceptance from customers as it delivers a better experience and convenience combined with a very, very solid, expensive content slate. In the Airtel business segment, we reported revenues of about 5,060 crores. Discontinuation of the commoditized low-margin business is now fully reflected on the base, and what you'll see for going forward is really underlying growth. But if you look at the underlying revenue growth, stripped off the discontinued commoditized business, we grew at 2% sequentially. And the business outlook continues to be strong, with a strong visibility on funnel and the order book. We're seeing some early signs of green shoots in our global business. During the quarter, we won multiple deals in our IoT and security business. On the digital businesses, we're strengthening our digital portfolio across cloud, cybersecurity, financial services, IoT, and CPaaS, with continued strategic investments. Airtel Finance is shaping up well, with acceleration in loan disbursements and credit card issue. Our partnership with several NBFCs is going as planned, with increased supply, all of it now integrated into Airtel Thanks. We are seeing continued improvement in offtake. Our payments bank monthly transacting users stood at 98 million. Annualized revenue run rate is now over 3,100 crores, growing over 27% year on year. Deposits remain strong at about 3,750 crores, growing 29% year on year. A quick update on Africa. Constant currency revenue growth continues to remain strong at 6.7% sequentially. And this was also helped by a favorable currency movement, which led to a solid reported revenue growth of 6.2% sequentially. EBITDA was 4,456 crores, with a margin just under 37%. The balance sheet remains solid, with net debt to EBITDA of under 1. Let me now briefly comment on each of our areas of focus. The first area is really the continued focus on building a diverse and resilient portfolio. The underlying performance now across the portfolio was strong. Africa accounts for 24% of revenues, India mobile at 55%, and India non-mobile at 13%, Indus now at 8%. Our investments are channelized towards building future-ready digital networks and digital services to accelerate growth across our portfolio. The second area of focus is to win quality customers. Let me start with broadband. As I mentioned earlier, we see a large opportunity, a penetration opportunity in homes. Our investments are now prioritized to capitalize on this growth. We continue to focus on 3 areas: deepening our network and market footprint, and therefore we're accelerating rollout of fiber home passes. I want to get to a quarterly run rate of 2.5 million home passes, up from 1.6 million. FWA will drive the addressable market further by expanding our footprint where we are unable to get fiber. Second, we are focused on providing exceptional value to our customers through bundling content and driving convergence. We partnered with Google to bring a compelling Google One Cloud storage subscription service to our customers.
Okay, so that's Bharti Airtel. Now, of course, in terms of numbers, largely in line. It was, in fact, trading in the green for a better part of the day, and we've just about slipped in the red. The intraday chart in front of you. Kush Bora, any view with regard to a Bharti Airtel?
I think this is a good time to accumulate a stock like Bharti. The stock had a good run. It's just consolidating, with a mild positive bias. Even if you just don't count today's move, the stock's actually been consolidating with a positive bias. So not a bad idea. Don't look for a quick breakout and a very sharp uptick in terms of momentum. But if you want to buy and hold for 6 to 12 months, I think this is a good time to start accumulating a stock like Bharti.
Okay, so good time to start accumulating. But that time on the show, in fact, we're delayed by about 12 odd minutes, where Soumit Sarkar joins us with all of the chatter he's been picking up from dealing rooms. What did you find out today, Soumit, on Heard on the Street?
Well, multiple stocks remain in focus. Firstly, it's Pidilite, where dealers are indicating that there are some buy flows on institutional desks that they're seeing at lower levels in this counter. So keep an eye out for Pidilite. Along with this, Piramal Pharma, this stock is down in trade, and there's an anticipation that there could be a block deal soon in this counter, and hence the stock has been down around 3.5% in trade. For Adani Energy, we have seen a sharp correction in the share prices from the day's lowest point, and dealers are indicating that there are buy flows on domestic institutional desks in trade today when it comes to Adani Energy. For Coforge, the stock is one of the top losers in the Nifty IT index, and the selling pressure is largely because dealers are indicating that a prominent foreign institutional investor is a seller in this counter in trade. And lastly, when it comes to IIFL Finance, the stock has been buzzing in trade. It has been gaining on anticipation of a potential management rejig that is expected to happen in IIFL Finance. Dealers are indicating that a prominent industry name who resigned from an NBFC is set to join soon IIFL Finance. So keep an eye out for that counter as well.
All right. Thank you so much, Soumit, for that. So all of those stocks, of course, in focus. Let me quickly go across. We have Sameer Dalal also joining us. But before that, Eternal. Well, the other piece with regard to dealing room chatter is Eternal is, or dealers are indicating that there is going to be a block deal soon. And Fin may actually look to sell its entire stake in Eternal, and Fin currently holds around 2.1% stake in Eternal. It's going to be a large one which will come out in the open now, around 6,000 odd crore up for grabs. We'll have to wait and watch as to how that plays out. So Eternal in focus on the back of that as well. But let me bring in Sameer Dalal, from Natvaral and Sons Stockbrokers, joining us at this hour. Sameer, welcome. We were just prior to this segment, we were talking about Airtel. The numbers, that's point number one, and the commentary coming through. We've seen a decentish run up over the last couple of years. The stock has been a multi-bagger, so very, very strong returns. What next from here? Because what we've seen is debt coming off. So give us perspective on what to see, or what do you expect from an Airtel?
If you have a long-term view, I still remain very, very positive on an Airtel, for the simple reason that when you have kind of a duopoly, because yes, Vodafone is there, but they're limping along. But if you have kind of a duopoly and where they're able to capture more and more market share from, the lame duck which is there, that will allow them to generate the operating leverage and start increasing profitability. Secondly, we've seen ARPUs move up quite substantially from over the last few years. It started off at about 150, 160. It's moved up all the way to about 200 plus. I think it's closer to 230 or 240 now. So you've seen a good uptick in ARPUs, and that could probably over the next couple of years head up to 300. A lot of the cost is already into the system. So any increase in ARPUs leads to further increase in margin. So that from the telecom space, I think it's a very interesting thing. It's just that valuations have probably run up in the near term, in the short term. So from that perspective, we could probably see a longer consolidation. And in fact, I think if the stock price if something were to go wrong in the markets, the stock corrects by 10, 12%, closer to 1,700, I think it would be a great buying opportunity for the next 3 years. I think it could still double over the next 3 years from the 1700 odd level. So it's something that we like. The international businesses will keep growing traction. And lastly, what you heard the commentary from the management in regards to broadband. I think that opportunity is still extremely large. So I think overall it's very well placed. Just I would prefer to buy it in corrections because valuations are a little stretched or rich. But in a duopoly, sometimes valuations can remain rich for a longer period of time. So we need to see. But yeah, I would definitely accumulate on dips.
Okay, interesting. Okay, we're in the thick of earnings, and frankly, they're coming at us thick and fast. The other one which has really buzzed on the back of numbers and commentary is a Bosch. Let me take your view first, Kush, with regard to a Bosch. What's the take? The stock reeling under pressure, 5.6% lower.
Yeah, so clearly, result reaction. But otherwise, if you see, the stocks actually had a very good run all the way from about 31,750. The stock actually ran up to 41,000 odd levels. If I take out the fact that this is a result reaction, this would actually more likely look like a sharp profit booking. With two factors going for it. One, the sharp run up that it's already had in the last month, and two, the markets doing what they are doing. I think the stock would find support near the 37,700 mark. If that indeed does hold up, then I think the medium-term uptrend that the stock is in could well continue. If that is breached, then however, there could be lower levels of 36,000 that could be tested, and then you might want to start accumulating or maybe consider accumulating around those levels. But watch for 37,700.
Okay, all right. So that's with regard to Bosch in terms of the technical view. But let's bring in Parvat Srinivas Reddy, who's the managing director at MTAR Tech, joining us with regard to the Q1 FY26 numbers. So talk to us about the numbers, especially with regard to margins. What's aiding the margin number? Is that sustainable? Give us some perspective.
Yeah, the margins are sustainable. And as I said, moving forward, by end of the year, we will look at about 21% EBITDA margins with plus minus 100 basis points. We are right on track with that.
Understood. So what's the kind of order book that you're looking for by the end of this year? How much of the current order book will you execute, and how much more will you accrue through the year? What's the opportunity size looking like?
See, the opportunity size is very large. We're looking at close to more than 1,000 crores of orders kicking in from the nuclear division itself over the next 3 to 6 months, and also from the aerospace and defense sectors as well. So by end of the year, we'll have substantial order book, much more than what we had last year. So we are right on track with that as well.
You give us a number, and how much of the 930 crore do you execute this year?
No, as I said, we'll execute most of the orders, not entire 930 crores, but we should be doing about close to about 800 plus crores. And then we move forward with all the additional orders or what we're going to get during the course of the year.
And how much would that be? Because now you'll be at 800 crore at the end of FY26. So what's the visibility like in terms of execution for FY27?
That's a little too far to ask, but the approximate order book by end of the year should be close to about between 1,500 to 2,000 crores is what we're expecting.
Okay, understood. So if you don't mind, what's the current capacity like when one would evaluate it? Till what level of top line do you not have to do more capex?
It doesn't work like that. See, we have enough capacities in different segments. Like once we're moving into the new segment like oil and gas, we already established capacities for aerospace and defense. So we establish new verticals. We have the new facilities coming in. That's what we are doing this year. So it depends on what kind of projects we undertake and how we take it forward. But we have enough capacities on the existing segments that we have. Any new area that we're entering, we keep adding those facilities to take them forward. For example, in oil and gas, we are doing that this year. So we have done last year for aerospace. So that's how we progress in that field.
Understood. Sir, is there a growth clip in mind that you have? Is that how one should look at your business? How should one look at MTAR in terms of maybe the 3 to 5 year view?
See, as I said, always I've said MTAR has been a very innovation-driven company in terms of the kind of products we develop and the way we work with our MNC customers and also with Government of India in defense and space sectors, etc. We are there for the last 40, 50 years. And if you look at the way we are growing and the kind of development activities we are doing, So you can look at an average, moving forward as well. You can look at least about 30% of revenue growth year-on-year basis moving forward as well.
Okay, 30% growth, 21% sustainable margin. That's the takeaway.
I said 25% growth for this year, but moving forward, we'll move to about 30% year-on-year basis.
Yes, absolutely, sir. Got your point loud and clear. Thank you so much for joining us. We'll let you go on that note. Some of these companies, really strong guidance coming through and really long runways as well in terms of growth. But the one in really under pressure and in focus today is a Britannia. Company announced quarterly numbers and more importantly, commentary coming through from a Britannia as well. Stock is down 4.5% as we speak. Mahima joins us with what's happening.
Right, so as you rightly mentioned, Q1 has been not a strong quarter per se for Britannia, and that's because a lot of FMCG companies came out and have shown good volume recovery, and that's not the case for Britannia, and probably that's what the street is not liking. In terms of the key takeaways, revenue was largely in line, but EBITDA and PAT did miss its estimates, and that's also something that the street has not taken quite nicely. Even in terms of margins, they did take a hit. Overall, brokerages have anticipated that volume could be in that low single-digit number, which has not been the case for Britannia earlier. Despite of the inflation going on, they had seen a volume growth of anywhere between 6 to 8%, but that's not the case this time. In terms of management committee, they have pointed heightened competitive landscape across product categories. This they mentioned in their con call as well as their press release. In terms of the overall focus, they've said that going forward, they'll be focusing on protecting their margins rather than growth. So, this is the opposite case of what HUL or counters like Tata Consumer have come out and said that they'll protect growth over margins, but here they've said that they'll focus on margins rather than investing in growth. In terms of demand, they've said uptick in demand was seen across both rural and urban markets. So that's a positive commentary coming in. In terms of where the earnings, the numbers stand, revenue saw growth of around 9%. EBITDA was flat. Overall, margins stood at around 16.4%. The expectations of margins were at 17.2%. So that's also a negative. And PAT saw mere growth of around 3% for the company. In terms of what brokerages have penciled in, well, Macquarie has given it a target price of 4,850 and maintained underperform. And Morgan Stanley has maintained equal weight with a target price of 5511. Both of them have said that overall margins were impacted because of competitive intensity as well as the kind of employee cost that went up for them. And overall, they're expecting, Morgan Stanley especially is expecting growth to be sustained and continued brand investment will take place. In terms of the key con call takeaways, because positive commentary coming in from the management slightly, but that's not reflected in the stock for sure today. In terms of what the management has said, they've said that most price hikes are now taken, so no price hikes going forward. That will also improve the margins going ahead. Revenue growth to be higher than volume growth, so that gap between value versus volume will not narrow is something that they've indicated. Overall, 6 to 8% will be the gap in the next 3 odd quarters where value and volume stand. Improved relative market share is something that they've said that's happened in 6 out of their 8 markets, and both urban and rural growths have been in a positive trajectory. Rural markets have grown in double digit and urban markets in single digit. Lastly, in terms of where quick commerce and e-commerce stand, they've said that overall 4% of their revenue comes from e-commerce and quick commerce, and like I mentioned earlier, they've said that their margin will sustain going forward is something that they've guided for. So this is the overall view of how Q1 has panned out for Britannia.
Okay, Mahima, very quick follow-up on this one. So while we have while we're seeing that Britannia is suggesting that they're not going to undertake any more price hikes, right? Wanting to understand whether that's more negative than positive, because you see margins under pressure and then you're likely not going to see price hikes. So how should one look at this?
That's actually a positive. So what happens is it's a vicious circle. If inflation goes up, company has to take a price hike, and because of that, demand goes down, and in turn their volumes also come down. So if they've said that they'll not go ahead and do any price hikes now, that means that volume recovery should happen in the next 2 to 3 odd quarters. So that's a positive.
Excellent. Okay, thank you for that, Mahima. Samir Dalal, let me bring you into the conversation. What's your sense like on the entire FMCG space? Certainly some of these stocks not cheap. Britannia trading at near 60 times. I'm talking trailing 12 months, of course. No growth, no volumes there. How should one rationalize these businesses? Or do you just say that large addressable market and therefore this will continue to grow?
So you have to some extent, say large addressable market, so the growth will obviously be there. But the problem is that the premiums that you're paying for the growth at the current moment is not justified. Now, two things. One, rural had been a bit slow over the last couple of years, so growth had taken a bit of a hit if you see volume growth. So hopefully, if we've had a good monsoon so far and if things continue on track, and with the cut in taxes that the government has given, we can hopefully start seeing some volume growth upticks. But the current quarter, again, apart from Britannia, I mean, HUL also had 3% growth. Nestle's growth volumes are very poor. Britannia has not been great either. So we haven't started seeing that. So it will be still a bit of time before these stocks start performing. They have a lot of value from the simple reason that, look, these brands that they've created are going to keep getting more and more traction as the growth comes in, right? So we believe the opportunity maybe over 3 years, 4 years, 5 years may be good, but I would not be recommending anyone to buy it right away across the board FMCG. For the simple reason that I don't want to, we discuss this in IT as well, that why would you pay a PEG of 3 or a 4? So in FMCG, I mean, I agree it's a B2C business and not a B2B, but still to pay a PEG of closer to about 5 and 6 seems a little unjustified. So I would wait for growth to start coming in or stock prices to start coming down. That is when I think the FMCG space would start looking attractive. The discretionary side, though, I think the opportunity is better, where the operating leverages can play out quite quick and the numbers could start looking quite attractive. So if I were to take a play on the consumption, I'd rather take it on the discretionary side than on the FMCG side.
Well, viewer perspective, PEG is price to earnings, the multiple itself divided by the EPS growth that is being penciled in. Clearly not bullish, and broadly, that's the thesis. Kush, let me come to you. First, with regard to a Britannia in particular, and then also give us a perspective on any other, maybe one name in the FMCG space which you seem to kind of like, if you have one.
So I'm in a good mood. I'll give you two, but let me start with Britannia. Let me start with Britannia first. The stock was actually doing rather well. Saw some consolidation, some profit booking with the market. But I think, these numbers are perhaps preempted. Yesterday also the stock was down about 2.5%, and then the big crack today. I think there's a good, support from a near-term perspective around the 53.40 mark. If that holds up, then yes, the stock could go sideways and then maybe resume its uptrend, going forward. But if that is broken, then sub 5300 levels, 5270, could also come into test. Now, the two stocks in this space that I like, one is Gillette, not often discussed, not a trader favorite. But if you see the kind of outperformance that the stock has given in the last month and a half, it's been staggering if you just compare. Otherwise, in the recent past, the stock's actually seen some consolidation, but that is also respecting the near-term support zone of 10,400. So don't look for very sharp up moves, but if you want the FMCG kind of steady, stable returns with some degree of safety, then Gillette is your stock to go with. And the other one is Emami. Now, notwithstanding today's move, which is a bit of a downturn, but there also the stock is respecting the 600 mark and the 200-day moving average. If you see on a weekly basis, last week, the stock actually did very well, up 7.5%. Today also, or rather this week also, there was this continuation. But I think Britannia results clubbed with whatever is happening in the market, I think brought about some profit. Okay. Around these levels, it looks good for a trade as well. So with a stop loss around the 590 mark, if you're gunning for higher levels of 615 and 625, Emami could be a quick play.
Right. Kush, just realized we haven't taken our picks for this afternoon. It's been busy over the last half hour, but give us those picks.
I can see that. It's been a packed show and a good one at that. Yeah, and I thought you'd never ask. So the two stocks on my radar, JK Cement and Jindal Stainless. JK Cement for targets of 7070, 7200 being the second target, and the stop loss around the 6790 mark. You could consider a long trade. Jindal Stainless also very interesting structure, volume action very interesting. 775, 800 targets on the upside, and 705 is the stop loss.
All right. Well, Kush, I promise it doesn't get any less busy, frankly. The next half hour also looks quite packed. But the latest from the Anil Ambani case, we're learning from our sources that the Enforcement Directorate has questioned a couple of top executives of his business empire. Let's go across to Aishwarya for more.
Well, we're currently outside the Enforcement Directorate headquarters. What we're picking up currently is that senior executives who were summoned by the Enforcement Directorate are here, including Amitabh Jhunjhunwala as well as Satish Seth, who were the top men in the Anil Ambani group at the ED headquarters, are being questioned currently. That is under operations. Interrogation is under operations here on Wednesday. Now, these senior executives at the ADAG group handled major financial dealings as well as operations as far as the ADAG group is concerned. Now, earlier ED identified at least 25 executives from the group during their investigation as well as searches, and like we had reported yesterday, which is Tuesday, the ED interrogated Anil Ambani himself for about 8.5 hours. The interrogation went on, as well as all of his statement regarding the allegations leveled by the ED that were recorded on camera. He was not allowed a lawyer, and a couple of hours were also spent in confirming or rectifying some of the statements that have been recorded during the interrogation on Tuesday. Apart from that, of course, as we have been reporting, this is related to the 17,000 crore loan fraud probe that ED has leveled as allegations against the Anil Ambani group. A lookout circular has been issued. Close to 50 firms across 25 locations have been so far searched and investigated by the ED. Allegations, of course, are of quid pro quo, taking kickbacks, and also irregularities in financial dealings, siphoning off money into other accounts or shell companies. Those are some of the allegations that have been coming from the Enforcement Directorate.
Right. All right, thank you for that, Aishwarya. All right, let's talk about Bosch. Again, a stock in focus. It's witnessed its biggest fall since January 2025. Hiral, what's ailing Bosch?
It's clearly post the earnings con call, Tamanna, that the pressure has continued. In fact, 5.5% to 6% is the kind of cuts that you've seen here. Firstly, what they've said is that they've denied any merger talks with one of their unlisted units. So that was one of the key takeaways from the conference call. Apart from that, the demand in PVs, two-wheelers and CVs is subdued, is what they've indicated. And many developed regions have continued to see a weak demand outlook for autos currently. In addition to that, they've said that the global environment remains volatile from here on. If you see the stock run up in the last 3 months, it's almost up around 29% versus the auto index, which is up nearly 4.5%. And from a valuations perspective, the 5-year average is at around 36 times. And if you talk about its 12 months forward price to earnings, that is at 44 times. So clearly, the stock is also expensive as per its average. And secondly, if you talk about the run-up, that has been really steep. You have brokerages which have maintained a sell, like a UBS, though they've hiked the target price to 23,000, and hiked the target price to 26,900 from a 23,600. Apart from that, what they've said is that the revenue and EBITDA is broadly in line, valuations are stretched, and even if the merger math does not justify the valuations, this is what they will look at from here on. MOSL, they've maintained a neutral. What they've said is that the two-wheeler order wins is impressive. The strong earnings is what has actually fueled the margins as well. And following the recent run-up, it appears fairly valued. So mixed views coming in from brokerages, but the commentary with regards to outlook from here on, and secondly, the denial in terms of merger talks with the unlisted unit is what has not enthused the street.
In fact, stay on with us. Hiral, let's talk a bit about Bajaj Auto as well, that have come out with this Q1 earnings. Were those largely in line? Because that stock also saw a bit of pressure and then recovery.
Absolutely, largely in line across parameters, because if you talk about the revenue growth, that was mainly driven by a 5% year-on-year growth in the average selling price, and even the volumes have remained flat. Apart from that, if you see in terms of the margins, that was slightly a deterrent because the margins are down 50 basis points, and this is on the back of a weak volume mix as well as an adverse mix in terms of currency appreciation impact and lower exports. If you talk about the margins, they've fallen below the 20% mark, and this has happened for the first time in the last 7 quarters. The only reason why we've seen this kind of a profit growth this time around is on the back of a higher other income, and that has come in ahead of what the street was estimating as well. So very quickly, exports, premium motorcycles, CVs and Chetak, they are the ones which have led with double-digit growth. Margin decline again mainly because of the lower dollar realization. The mix is something which is slightly off. Exports are lower, and that is what has impacted the overall numbers, but in line with what the street was estimating, and hence the kind of recovery that you've seen from the day's low on a Bajaj Auto.
Okay. Meanwhile, well-spun enterprise numbers are also out, and we should just quickly take a look at them. Those earnings have come out as well. The stock has been pretty flat and not really seen any improvement. Let's see if we can get those numbers back on the screen. So a lot of results in focus in the last 20 odd minutes of trade as well. We'll wait and see if Trent comes in anytime soon. Let me welcome Shivangi Sarda now, MOFSL, Sudeep Bandyopadhyay of IndiTrade also joining us on the show. Welcome to both of you. Shivangi, let me come to you first on the market thought and the market view.
Very good afternoon, Tamanna. Thank you for having me. So we've seen that, the markets have actually reacted well. There is a lot of sticky buying which is seen at the support levels, even though there is pressure at the higher zones which is intact, and the call writers are consistently shifting their base lower. But then again, we've seen 24,500 being respected multiple times earlier this week as well. And somewhere or the other, there is support-based buying, which is very strong. But of course, lack of follow-up is also present, which is making the upside capped. So we are going forward in a range-bound manner for the rest of the week. And we're looking at 24,500 as a major make-or-break zone here for the index, with the upside levels of around about 24,800, which is the next resistance for Nifty index. But talking about Bank Nifty, here some of the PSU names have contributed and pitched in for this index, and the index has managed to nearly close in gains. And we've seen that it has been respecting 55,200, which was also yesterday's low. And the index has struggled above 55,500, but then a hold above 55,500 will commence the next leg of rally. So we'll wait for this level to reach and hold above it to again start buying fresh. But till then, we're expecting not much of a downside, but range bound and time correction.
Okay, range bound and time correction in the Bank Nifty. What about your picks this afternoon?
So on my radar, of course, from the banking space, we've seen that PSU banking names are doing quite well. So SBI is my preferred pick, and we've seen excellent short covering move here. The stock has witnessed a good comeback after the negation of the lower top, lower bottom formation of the last 3 weeks. And we've seen that, in the July series, some of the shorts have been shed in this one. So this is looking quite positive for the next series as well, with a target of 835 and a stop of 790 levels.
Okay. All right. Here are the numbers for Welspun that we were talking about. Net profit mildly down, almost flat, I think 1% down. Revenues are down 9%. EBITDA up 12%. But look at the margin number. The margin number actually gone from 17.5% to 21.6%. So you're seeing a little bit of recovery there in Welspun coming in. Sudeep Bandyopadhyay with us this afternoon as well. Sudeep, very good afternoon to you. Trent, what are you doing with Trent?
Well, we like the company, we like the business, but valuation has always been a challenge. Let's see what the numbers they come up with. I've been advising investors to keep watching the space, not actively start buying at this stage, but let's watch the numbers.
Okay. And what about a Hero and Bajaj? What is your view there?
I've been positive on Hero for quite some time, and there are multiple reasons. One, we believe strongly that rural recovery is underway and will definitely start showing in a clear manner post Q2 because festive season also will set in. Monsoons have been good. Government schemes and government projects are also helping rural recovery. So, and as we know, Hero Motorcorp has got a significant hold in the rural market with their vehicles. So we expect significant pickup. Also, the other thing interesting which is happening in Hero is they have gone into the exports market with a renewed gusto. And we believe that this should also help Hero going forward. So overall, and also considering the valuation, peer comparison valuation at this stage, we believe Hero MotoCorp is definitely worth looking. Let's wait and watch for the numbers and the management commentary. But fundamentally, this looks good.
So between Bajaj, Hero and a TVS, what would be your preference, Udip?
Well, at this stage, definitely it will be Hero. But, I think, commenting right now is a little difficult because we have to wait and see the numbers and the management commentary of Hero. Bajaj has already come up with the numbers and numbers are pretty much in line with estimates. Bajaj also has been doing well, but relatively speaking, I do like Hero more at this stage.
Okay, so Hero is on top of those charts. Meanwhile, PVR Inox also in focus on the back of its Q1 numbers, but will Sayara's collections reflect on the balance sheet? We spoke earlier to Sanjeev Bijli, Executive Director of PVR Inox, and Saurabh Pant, Vice President of Finance and Investor Relations. Listen in.
The first question, Sanjeev, I'll pose to you is that in terms of the overall numbers, just want to get a sense because it's been a good, strong quarter in terms of where the releases stand, plus you also had the IPL rights. Just want to get a sense, did it, exceed your expectations or were you expecting more?
Well, we're always expecting more, but I think we're very happy with the results nevertheless, because the same quarter last year was a bit underwhelming because of the elections and also because of IPL. We knew that there were some great films coming out this quarter, including the big Hollywood films, which had actually seen a hiatus for the last couple of years because of the writer's strike. On paper, these films in Hindi seem to be mid-budget, like Jaat and Raid 2 and Sitare Zameen Par and Bhool Chuk Maaf. And that's what is the wonder of our business, that most of these movies overperformed, which we call in our business sleeper hits. We weren't expecting them to be as big as they did. And so a combination of all these English films, regional films, and Hindi films over a traditionally very a popular part of the year, which is the summers, where people are on vacation and they do have disposable time to go and watch films, really helped us garner the kind of admissions that we were hoping for, and a bit more. We've got 34 million people in this quarter, and we're satisfied with the numbers that we got, and a higher ATP, which went up by 10%, and also a higher spend per head, which went up by 10%, all sort of came together to deliver these numbers.
There are also re-releases, Sanjeev. How has that worked out for you? Just want to get a sense if there has been demand, and I mean, from what I have gathered, there has been demand for that. So just want to understand the revenue breakup when it comes to re-releases versus the releases this quarter plus the IPL screening. What has been the revenue breakup like?
Well, re-releases and are really a part of our curated show program, where we are slotting re-releases of old films depending upon the gaps in programming. There are times in a month where we don't get new releases. And ever since we started with this re-release program with Rockstar, Sanam Teri Kasam, Laila Majnu, which became colossal hits, so we have been working with the producers since then to identify films that may have some audience that wants to come and watch them again, mostly in Hindi only. And we've had some few very good responses in the last few months. So that remains to be a property we have developed, and that remains to be a property that we will work on. We will keep doing re-releases. As a percentage of our admissions, they're still very small. They are contributing to maybe 5 to 7% of our total admissions right now. But it is a very essential part of our programming that we continue to focus on.
Okay, so that's of course a slice of that conversation that we had with PVR, or Mahima had with PVR earlier today. Let's in fact address Trent, because that one's, I mean, it's been a while. We've been expecting those numbers. And really, Tamanna, the expectation is that you'll likely see the top line growth has already come in. So that's 20%, which is also lower than the 25% which the street was extremely disappointed by during the guidance that they gave post the Q4 numbers.
Right.
And therefore, is it that they're going to likely miss numbers altogether, and the street in any case is quite disappointed with the kind of top line that Trent is delivering given the valuations?
That's not how the street is behaving at all.
It's not how it's behaving today.
At all. No, for the last several sessions,
That's
Harsh, I mean,
true.
if you just pull up the last 1 week, 5-day chart of Trent, that's not how the street is behaving. In fact, you have seen perhaps quite a positive mood on Trent. Look at that, about 6.5–7% up in the last 1 week. This whole slowdown or consumption push, none of this seems to be bothering investors when it comes to Trent. In fact, that's a question we'd asked Sudeep, and I want to ask Shivangi on a Trent. How are you looking at it on the charts?
So Tamanna, if I look at Trent, of course, there has been quite a lot of volatility on this one earlier, and we've seen that this stock had kind of beaten down, in the last 4 to 5 weeks. There is some revival over here, but then of course the stock has taken a breather from the downside. But we've seen that momentum is still kind of building up over here, because I can still see resistances at the higher levels near its 50 daily exponential moving average. So, my take on this one would be that if it manages to hold above 5450 levels, then we could go for a buy here, because stock prices are likely to stabilize over there, or else we could actually wait and watch for this one.
Okay, so that's with regard to Trent, but the expectation largely is that margins will come in at around 14.6% versus the 15.3% number same time last year. PAT likely to rise around 15% as per our poll. 392 crore odd is where that PAT number is likely to come in at. So that's broadly the expectation. Number of stores added doesn't really impress. Sudeep, talk to us about how you're viewing Trent, both the commentary that's come in, as well as what are you penciling in, and what would be a big disappointment if at all that were to come through?
The margin definitely is under pressure, and quarter on quarter the margin is coming down. I think Zudio gave them a significant upside, and that actually changed Trent from where it was. Now the Zudio business is under some kind of pressure because competition has come in Zudio from both online as well as offline players. And the Zudio is not the same what it was, let's say, a couple of quarters back also. So at this stage, we'll have to wait and watch how the Zudio business is moving ahead. The other business they're talking about is the format of Star Bazaar. I think that is a low margin business inherently. We'll have to see what the management commentary is on their plans as far as Star Bazaar is concerned. By and large, I think I am comfortable with the way they have been taking the business forward. But the only challenge is the valuation, because the valuation assumes a certain amount of growth and certain amount of profitability, which to my mind is difficult to achieve at current stage. And hence, I think I'm a little careful on Trent.
Not buying a Trent right now. If the numbers are bad tomorrow, will you exit? Or if you're holding right now, you'll exit?
Well, I will have to understand what the numbers are and what the management commentary is. I think it's also very, very important. I won't be in a rush to exit, but definitely I will not advise a fresh buy if the numbers are not, at least in terms of what we are expecting.
Okay. Okay, stay on with us. It's time to focus on the bull case and the bear case. We're talking about Prestige Estates today. The first quarter numbers actually didn't look half bad. but the stock has had quite a rough day, tumultuous to say the least, now flat. We spoke with the management today on KYC as well. Anushi joining in to break down the bull and the bear case for Prestige.
Well, thanks for that, Tamanna. So, just 2 quarters ago, we were discussing more about the headwinds which were happening with Prestige Estates. But now the focus is back on the numbers that have shaped up for the first quarter. In fact, what we are seeing in the bear case scenario and the bull case scenario. Firstly, I'll start off with bear because that would give context as to what was happening in FY25 in general. So if you look at FY25 project launches, they had been delayed and this led to a miss in terms of where the FY25 guidance laid of around 25,000 crore of odd so, with the company clocking in pre-sales of around 17,000 crores. So approval delays had led to these projects being pushed to the next few quarters or odd so that we are looking at. Now, this was the impact that had played out in FY25, which turned out favorably for the first quarter of FY26, considering that there had been a spillover of launches that we are looking at, and the company reported a 300% of an increase in terms of where the pre-sales value is concerned. Also, this was aided by their new entry in NCR market with their launch of Prestige City Indirapuram project that they had been talking about for quite some quarters. So, if we look at the overall guidance in terms of how the FY26 is going to shape up, now that remains on the healthier side. The company expecting around 25,000 crore to 26,000 crore of pre-sales for this year itself, and this is with a launch pipeline of around 42,000 crore that we are looking at. Do note that the company has a huge land bank, and they have given a guidance in terms of how just not the residential business but even the commercial business, the annuity business is expected to shape up in the next 3, 4, 5 years of periods as well. But if you look at the bear case scenarios now what has been a concern amongst not just for Prestige Estates in general but for the overall residential market is growth stagnating in the luxury spaces is what we are seeing. In fact, just a few weeks ago, we had discussed about the Anurag note also, which pointed out that in particularly MMR region that they have seen an uptick in terms of how the inventory levels have been for the luxury market. So concerns related to that is something that we should be watching out for. While the company did state that, their 1 to 3 crore of ticket size of market continues to remain on healthier side and continues to see strong demands, it's the inventory levels going forward that should be in focus as well. Now, if you look at what else is happening with the company, now other than that, we have a couple of updates in terms of what Prestige Estate is doing. Firstly, in terms of the EBITDA margins also, we've seen about a 20 to 25% of a growth. Now the company is targeting to improve their margin levels to 30 to 35%, and this is on the back of the new acquisitions that we are looking at. Other than that, the company will also remain in focus on the back of its hospitality business IPO, which will be listing soon. The company did state that it has already received a clearance for the same. However, in the bear case scenario, while we have seen that the EBITDA margins are expected to see a pickup, is the pricing growth now, which would now narrow down to single digit as compared to the double digit growth that we've seen in the last 2-3 years post-COVID, the surge that we have seen. So pricing growth remains a factor just for the overall residential space as well. So, this is the overall picture that we are seeing for the bull and the bear case scenario for Prestige Estates. Back to you guys.
I think we should talk about Prestige and we should talk about what's happened to real estate today. It's been a tough day for real estate. Sudeep, do you see a reversal from here or more pain to come for the Realty Pack, and any view specifically on a Prestige?
No, I don't think there is too much of an issue as far as real estate is concerned. There were some expectations building up around, probably a further rate cut. That didn't happen. So it was a bit of a knee-jerk reaction as far as realty is concerned, by and large. There is no specific issue as far as real estate is concerned. Yes, one has to be very company specific and look at opportunities in pockets. I strongly believe that commercial is doing pretty well and will continue to do, upper end commercial will continue to do very well with the proliferation of GCCs across the country, particularly in southern part of India and also in Mumbai, Pune and NCR. So as far as Prestige is concerned, we are positive on Prestige. I think, market has been a little too harsh. The numbers were not bad, and I think the management commentary was pretty bullish, and they are expecting strong growth in the coming quarters. Their expansion into Mumbai, NCR is working out well. Hyderabad, they don't have any new projects, but Bangalore new project launches are also on track.
Okay, Shivangi, let me quickly take a view from you with regard to the realty pack. We've seen a decent recovery from the lows in some of the names in realty today.
Absolutely, Harsh. We've seen that Realty Pack has seen some bit of revival, but then again, overall, the momentum is quite fizzled because even earlier this week and towards the end of last week, also we had seen that revival was somewhere attempted, but the stocks were hardly holding up. So Realty Pack would be like a sector headwind right now. So most of the stocks in this sector are not really looking quite lucrative as of now. So we could wait and watch on this one.
Sudeep, what do you make of the Divi's Labs numbers?
I think numbers were pretty decent. I don't see much of a problem. And look, I think, it's a company which has got a significant market hold. There are challenges as far as US is concerned. There are challenges on pockets. But if you compare with other, smaller comparable companies like a Loras or some of the other companies, I think Divi is in a much, much stronger position. It's margin miss is understandable because I think contribution from generics business was much higher. But fundamentally, I do like Divi's, and I think the company has rebounded from many downturns very, very successfully. So I will keep my faith in Divi's.
Okay, quite a few numbers in the last few minutes. You've seen Godrej Agrovet come in, you've seen Blue Star come in. We should actually bring back Blue Star on the screen. You've seen Electrosteel castings come in. So it's going to be result heavy. The other big factor is going to be, and Sudeep, I actually want your view on this, in case there is a big tariff announcement before we open markets tomorrow, because there is a executive order that Trump is going to sign at 2 a.m. India time. That's 4:30 p.m. Eastern time. We don't know what it's going to be. But do you think that that's something that people should brace themselves for?
Absolutely. I think, it's a very, very unpredictable situation as we speak now. Tomorrow morning when we open for trade, I think we will be looking at something completely different, and we have to be prepared for that. Obviously, roughly about 50% of Indian exports to US gets covered under the tariffs because electronics and other items are exempt. So the usual sectors which do get severely affected will continue to remain textiles overall, as well as leather goods and multiple other segments. So we have to be a little careful. Plus, there will be a sentimental impact as well on the market if there is a very heavy tariff imposed on India. We also have to be careful about pharma because a lot of things are being talked about by the US president on pharma, and we have a very thriving and flourishing pharmaceutical industry, which caters to a lot of requirements of US markets as well as US pharma industry by supplying generics. So we have to be again careful there.
Okay, just quickly want to address Blue Star before Harsh comes in to wrap up the markets for you. And what is happening there, the big spike there, but if you look at the numbers, I think you have to look at the internals because optically look at it, what it is on face value. Net profit down 28%, revenue is up 4%. I think this is because of expectations. This was a tough quarter, monsoons came in early, played spoil sport. Having said that, EBITDA is down 6%, margins have gone from 8.3 to 6.7%. Is it a sense of better than expected numbers and the weakness that was priced in? Perhaps that's what you're seeing from a Blue Star, Harsh.
Well, yeah, I mean, 52-week high, Tamanna, frankly, at 2,400. So the stock now has fallen quite substantially, even despite the rise we've seen today, and it bottomed at around 1,500 odd. So maybe it's that bit playing out, but 1/3% lower on the Nifty 50. Around 80 odd points is what we've shaved off. The Bank Nifty, though, holding on to some gains, which is a positive. Largely, I would believe and I would reckon this is also PSU Bank led. But let me pull up the heat map on the Nifty 50 first. Try and address that. Of course, you have some of those names which were sitting anyway in the green. couple of those surprises. Asian Paints 2% higher, HDFC Life also near 2% higher. So those are the two gainers. SBI up 0.5%. You can see HDFC Bank also holding fort, which has led to the Bank Nifty being in the green. And then you have a Kotak Mahindra Bank also, which is absolutely flat. So outperforming the market today. IT and Pharma are the two pressure pockets today. We've spoken a little bit about IT. Now within the Pharma pack, you can see a Sun Pharma, a Dr. Reddy's there. Both of those dragging the Pharma index lower. There's an IndusInd Bank within the banking pack, which is down 2% odd. But a Cipla and Apollo Hospitals also within that kind of pharma and healthcare pack is also keeping pressure on the index. Let's talk about sectors and let's pull up the sectoral heat map. I'd reckon PSU banks is probably the only place to hide today, and that has been the case. The Bank Nifty 2 holding out in the green. It's Pharma, IT down 2% each, and then you have Realty within the broader markets, which is down 1.7%. You have the broader markets itself also under quite a bit of pressure. Let's pull up the advanced decline ratio, and what we're seeing there is, of course, that pressure sustaining pretty much through the day. 3:1 in favor of the declines, and the Nifty mid-cap and small-cap indices, both of those underperforming in trade today. 0.9% lower on the Nifty mid-cap and 1.2% lower on the Nifty small-cap. Just no recovery being seen on either of those indices. I'd like to pull out the Nifty bank constituents and try and quickly zoom into those, see which ones are actually playing favor today. And Canara Bank, Federal Bank, SBI, so there's quite a few which have done fairly well, and it's a mixed bag in terms of the gainers as well. But the losers are predominantly the private sector banks. AU, IndusInd, IDFC and Axis. Those are the ones which have dragged the index to a certain extent. But otherwise holding up in the green, that's the Bank Nifty for you. Last off, the BSE 500 top gainers, top losers, and those are some names for you. Godfrey Phillips and some of those cigarette stocks doing really well off late, right? So 10% higher. Previous Specialties, the other one, 9+% higher. And IFL perked up in trade, was part of our herd on the street. So something you might want to go back and tune into and understand what that was all about. EPL is up 3.5 as well. Tube Investments up 2.5 odd. Those are some big losers for you. Bosch standing out. We spoke about Bosch and CCL products as well on the back of numbers. But broadly, that's what we have for you on India Market Close today. From Tamanna, myself, everyone who puts the show together, thanks so much for watching. Stay with us on NDTV Profit. We'll go across to Market Express, where we'll get you all of the major news that we've gone through today.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims. Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. Good afternoon. This is Malika Mishra and you're watching Market Express. Let's dive straight into the show. It was largely a tepid day on the Lal Street. Benchmarks ended the day in the red. The Nifty shut shop below 24,600. This is after the Reserve Bank of India's Monetary Policy Committee, headed by Governor Sanjay Malhotra, held the repo rate steady at 5.5%. Most sectors ended the day in the red, with Pharma, IT and Realty leading losses. Meanwhile, PSU Bank and Nifty Bank remained resilient. Britannia Industries reported a 3% YOY increase in Q1 FY26 revenue, rose 9%, aligning with the 4,610 crore forecast driven by low single-digit volume growth. EBITDA grew 0.5% to 757 crore rupees, but margins contracted to 16% from 17.7% due to weaker gross margins, higher employee costs and intense competition across biscuits and dairy. Management emphasized protecting margins amid a challenging landscape, with demand improving in both rural and urban markets. Macquarie and Morgan Stanley maintained cautious outlooks on Britannia Industries after its Q1 FY26 results. Macquarie retained an underperform rating with a 4,850 rupee target, citing a Q1 EBITDA miss due to weaker gross margins and estimating 4% underlying volume growth. Morgan Stanley kept an equal weight rating with a 5,511 rupee target, noting margin pressure from heightened competition but optimism for sustained growth through brand investments and innovation. Britannia's net profit rose 3% YOY to 5,521 crore rupees, but margins fell to 16% due to rising input cost and competitive intensity. Bharti Airtel reported a 46% QOQ decline in Q1 FY26 consolidated net profit to 5,948 crore, missing the 6,400 crore estimate due to tax reversals in Q4 FY25. Revenue rose 3% and EBITDA grew 3%, with margins stable at 56%. India's mobile business revenue increased 3%, driven by a 362.8 million subscriber base and average revenue per user rising to 250 rupees from 245 rupees earlier. Broadband saw robust growth while DTH and enterprise segments lagged. Net debt fell 9% to 1.25 lakh crore rupees. EPL delivered a robust Q1 FY26 with consolidated revenue rising 10% YOY, meeting its double-digit growth guidance. EBITDA surged 22%, driven by improved operating leverage and cost management, expanding margins to 20% from 18%. Net profit soared 56%, reflecting strong profitability. Growth was fueled by a 10% rise in the AMESA region, 14% in EAP, 9% in Europe, and 19% in the Americas, particularly in the beauty and cosmetics segment. The company's focus on sustainable packaging and new customer wins supports its FY26 growth outlook. Gland Pharma reported a robust Q1 FY26 with consolidated net profit soaring 50% YOY, aligning with the 216 crore estimate. Revenue grew 7%, slightly below the 1,531 crore forecast, driven by a better product mix and operational expansion. EBITDA jumped 39%, meeting estimates, with margins expanding to 24% from 18%, boosted by Cenexy's EBITDA break-even. Citi maintained its sell rating on Gland Pharma with a target price of 1,680 rupees, implying an 18% downside post Q1 FY26 results. Revenue grew 7% YOY in line with estimates, while EBITDA surged 39% to 368 crore rupees. Management remains optimistic about Cenexi's outlook with a new high-speed line at Fontenay and GLP-1 capacity expansion to 140 million units by FY29. Citi notes limited upside due to high valuations. Divi's Laboratories unveiled ambitious plan in its Q1 FY26 earnings con call, earmarking 2,000 crore for 3 new capacity enhancement projects to capture growing API and CDMO opportunities. The pharma giant reported stable raw material prices across its portfolios, boosting margins to 33.5%. With the Kakinada Greenfield unit now operational, Divi's expects a 22% EBITDA CAGR through FY27, driven by a strong product mix and easing costs. The stock rose 2% today, reflecting optimism in its robust growth outlook. Lupin's Q1 performance surpassed expectations with strong EBITDA and net profit growth. Revenue rose 11.9% to £6,268 crore, driven by robust US and India sales. US sales surged 24.3%, while India sales grew by 7.8%. Despite a 32.9% drop in global API sales, margins improved to 27.6%. Torrent Power's Q1 FY26 consolidated net profit fell 25% YOY, meeting estimates despite a 12% revenue drop to 7,906 crore rupees. EBITDA declined 20%, with margins contracting to 19% from 21%, impacted by lower power demand due to an early monsoon and elevated gas prices affecting merchant gains from gas-based generation. Renewable segment grew 20%. Saw a 20% revenue growth driven by solar additions and better wind conditions. The company remains on track for its 10 gigawatt renewable capacity by FY32. Alembic Pharma's Q1 revenue grew 9.5% to 1,711 crore rupees, meeting expectations. Strong export market performance drove growth with robust US and ROW sales. India business saw mid-single-digit growth. However, EBITDA margins slightly missed estimates at 16.4%. Centum Electronics Q1 revenue rose 11.4% to 273.4 crore rupees. Lower employee costs boosted EBITDA margins to 8.3% from 6.3%. Net profit reached 4.4 crore rupees, reversing last year's 3.8 crore rupee loss. Other income further supported profit growth. Avalon Technologies reported a strong Q1 with revenue soaring 62.1% to 323.3 crore rupees. The company achieved significant margin expansion with EBITDA at 30 crore, up from 4.3 crore rupees. Net profit reached 14.2 crore, reversing a 2.3 crore loss last year. Growth was driven by operating leverage and entry into semiconductor equipment manufacturing. Godavari Powers posted muted Q1 with revenue dropping 1.4% to 1,323.5 crore rupees. EBITDA falls 20% to 324.37 crore rupees due to lower sales realizations. Margins declined to 24.5% from 30.4%. Net profit decreases 25% to 215.96 crore, dragged by weak operational performance. Bajaj Auto's Q1 results aligned with estimates, with net profit rising 5.4% to 2,096 crore rupees. Revenue grew 5.5% to 12,584 crore rupees, driven by strong exports and premium motorcycles. EBITDA increased 2.8% to 2,482 crore, though margins slipped to 19.7% due to lower dollar realization. Supply disruptions from rare earth magnets emerged as a concern. And Morpin Laboratories posted a challenging Q1 FY26 with consolidated net profit crashing 65.5% to 4.1 crore rupees from 11.9 crore rupees year-on-year. Revenue fell 6.6% to 425 crore rupees, hit by weaker API demand and pricing pressures. EBITDA slumped 53.2% to 24.2 crore rupees, with margins shrinking to 5.7% from 11.3% due to higher raw material costs. The stock dipped 3% today reflecting investor concerns, though Morpen's medical devices segment grew 8%, offering some hope. And shares of Bosch plummeted today, marking their steepest drop since January 2025 as management dismisses merger talks with its unlisted unit. The company reports subdued demand for passenger vehicles, two-wheelers, and as well as commercial vehicles. Global economic volatility, geopolitical tensions, and supply chain issues pose challenges. Welspun Enterprises reported a mixed Q1 FY26 with net profit slightly down 1.1% at 103 crore rupees from 104 crore rupees on a year-on-year basis, impacted by project delays. Revenue fell 9.1% to 845 crore rupees, but EBITDA rose 11.8% to 182 crore rupees, boosting margins to 21.6% from 17.5% due to cost efficiencies and a stronger project mix. The company's order book remains robust at 14,500 crore rupees, signaling strong growth visibility for FY26. Shares edged up 0.5% today, reflecting cautious optimism. And the Reserve Bank of India has kept its repo rate steady at 5.5%. All 6 committee members agreed on this decision and retained the policy stance as neutral. Here's what the key headline: inflation is cooling. The FY26 forecast was slashed to 3.1% from 3.7%. Growth remains solid at 6.5% despite global tariff threats from the US. The bank says earlier rate cuts are still filtering through the economy. With uncertainty ahead, RBI is watching economic data very closely. NDTV Profit report reveals that India's major FMCG firms, including HUL, Dabur, Godrej Consumer, Nestle India and Emami, have cut senior leadership roles by nearly 25% in fiscal year 2025. HUL reduced its permanent workforce by 8.5%, while Dabur scaled back on hiring by over 6%. Nestle India and Emami saw declines of 3.6% and 2.2% respectively. These cuts come as companies face mounting cost pressures, softer demand, and growing automation as well as AI disruption. Firms are refocusing on leaner teams and sharpening their product mixes to stay competitive. The Enforcement Directorate questioned Anil Ambani's top aides, including Amitabh Jhunjhunwala and Satish Seth, in connection to the alleged loan fraud case linked to Reliance Group entities. Sources told NDTV Profit that both Jhunjhunwala and Seth appeared at the federal agency's headquarters in New Delhi, and the questioning was underway. The 2 aides being questioned are senior executives in Ambani's business empire and have handled major financial operations for the company. Noida International Airport has just announced a new partnership with Rapido, the popular ride-hailing service. This collaboration aims to make your journey from the airport smoother and more convenient. Passengers will now have access to a dedicated Rapido pickup zone right at the airport. To ensure a quick and easy experience, there will be special parking for drivers along with on-ground staff and clear signboards to help guide you. The Competition Commission of India has approved Chris Capital's acquisition of a majority stake in Theobroma Foods. Chris Capital, through its affiliates Infinity Partners, Aqua Investments and Atreides Investment BV, will pick up around 90% of the company. The estimated worth of the deal is 2,410 crore rupees. The original investor ICICI Venture, which held about 42%, exits fully, while the founding Messman sisters retains roughly 10% and stays involved. Knight Frank report shows that India's top 8 cities collectively house around 993 million square feet of office space as of June 30th, 2025. That makes India the 4th largest office market in the world. The country is on track to cross the 1 billion square feet milestone by Q3 of 2025, driven by strong demand from IT firms and global capability centers. Bengaluru leads with 229 million square feet, followed by Delhi NCR at 199 million square feet and Mumbai at 169 million square feet, together making up almost 60% of the total stock. Indian gaming startup Super Gaming has raised $15 million in fresh funding, and with that, its valuation has jumped nearly 5 times in just 4 years. Back in 2021, the company had raised $5 million at a valuation of $21 million. Now it's valued at around $100 million. Super Gaming CEO Robbie John confirmed the new investment and said the company will use the funds to scale up development and expand globally. The UK advertising watchdog has banned 2 Zara ads that featured models who appeared unhealthily thin. The ads drew attention to protruding collarbones and gaunt poses. The Advertising Standards Authority ruled the styling, lighting, and clothing created an unhealthy look. Zara removed the ads and stated the models had medical certification attesting to their health with minimal editing involved. The ASA has ordered the brand not to reuse similar imagery. WhatsApp has shut down over 6.8 million accounts linked to scam operations in the first half of 2025, Meta announced, targeting fraud hubs in Southeast Asia. New safety tools like alerts for suspicious group chats aims to protect users from fake investment schemes and crypto frauds. Meta's proactive measures in collaboration with OpenAI disrupted a Cambodian scam ring as authorities urge users to enable two-step verification. Prime Minister Narendra Modi is extending its full support to the rescue and relief efforts in Uttarakand's flood-hit Tharali village. He spoke with Chief Minister Pushkar Singh Dhami and assured him of all necessary assistance. Flash floods triggered by a cloudburst late on August 5th have caused widespread destruction, destroying homes and roads. While rescue teams have managed to save over 130 people, the situation remains critical. So far, 5 deaths have been confirmed, with more than 100 people still missing. The Indian Army, NDRF, SDRF and ITBP are all on the ground leading the search operations. One body has already been recovered from the flood-affected area. And Prime Minister Narendra Modi inaugurated Kartavya Bhavan 03 in New Delhi today, the first of 10 common central secretariat buildings under the Central Vista project. It will house key ministries like Home Affairs, External Affairs and Petroleum, replacing outdated structures to enhance bureaucratic efficiency. With 2 more buildings nearing completion, the project aims to modernize India's administrative hub by 2026. The Enforcement Directorate carried out coordinated raids across Delhi, Noida, Gurugram and Dehradun. 11 locations were searched under the Prevention of Money Laundering Act. Officials say a global cyber fraud ring duped Indian and foreign victims by posing as police or tech support agents. The scammers fraudulently transferred around 260 crore rupees in crypto proceeds into multiple wallets and then laundered the funds through USDT and Hawala networks. The probe began after FIRs were filed by the CBI and Delhi police, and key suspects are now in custody as the investigation further deepens. Former Bihar Minister Tej Pratap Yadav has launched a new political front. Expelled from the RJD by his father in May, he has now formed an alliance of 5 major regional parties like the VVIP, BJM, PJP, WAP and SKVP to contest the upcoming state assembly polls. He announced this in Patna, inviting RJD and Congress to join forces. Tej Pratap will contest as an independent from Mahua, pledging social justice, rights and transformation for Bihar. Delhi's 70 MLAs, including the Delhi CM Rekha Gupta, have received iPhone 16 Pros and iPads to support the Assembly's paperless initiative under the National E-Vidhan application. Costing 84 lakh rupees, the move sparked backlash, with taxpayers criticizing the use of public funds for premium gadgets amid unmet infrastructure needs. The Ministry of Mines issued a strong denial to reports claiming that private firms can mine atomic minerals offshore. It clarified that the Offshore Areas Atomic Minerals Operating Rights Rules 2025, effective as of July 14, grants exploration and extraction rights only to government entities, government companies or corporations. Private participation is explicitly barred as per legal amendments enacted through the Offshore Areas Mineral Act 2023. France battles its biggest wildfire of 2025 in the Aude region, where one person has died in Saint-Laurent-de-Lay and another remains missing. The fast-moving blaze, scorching over 13,000 crore hectares and destroying about 25 homes, has left 2,500 households without power as 1,820 firefighters struggle to contain it. Unfavorable weather fuels the fire's rapid spread, with roads closed and local communities reeling from the unprecedented disaster. A massive fire tore through a residential area in Manila, impacting about 1,500 families and blanketing the capital in thick black smoke. Over 50 fire trucks battled the blaze for 3 hours to bring it under control, with no casualties reported so far. The cause of the fire in the densely packed Tondo district remains under investigation as relief efforts begin. Spain scraps $7.24 billion F-35 deal, shifts defense spending to Europe. Spain has abandoned plans to purchase Lockheed Martin's F-35 fighter jets, redirecting its 6.25 billion euros defense budget to European-made alternatives, El País reports. This decision follows Prime Minister Pedro's commitment to NATO's 2% GDP defense target amid US tariff threats and strained EU-US relations. FC Barcelona has received approval to reduce Spotify Camp Nou's capacity to 27,000 for their opening La Liga home games against Valencia and Getafe in September. This phased reopening due to ongoing renovations is a significant step towards returning to their iconic stadium. However, the club faces a tight deadline to meet UEFA requirements for Champions League matches. Telugu star Vijay Deverakonda appeared at the Enforcement Directorate's Hyderabad office today in connection with a money laundering probe into illegal online betting. He is part of an investigation into 29 celebrities, including Rana Dagupati and Prakash Raj, for allegedly promoting betting apps that may have facilitated illicit financial flows. Deverakonda has been asked to clarify his role and discuss any financial links. He is cooperating with the probe as authorities dig deeper. And that's a wrap on Market Express, but do stay tuned to NDTV Profit as we have Profit 360 lined up for you right on the other side.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and
Market ends lower for second consecutive session as tariff uncertainty continues to weigh. Nifty Sensex closed near day's low as most sectors finished in the red. Broader markets underperformed the benchmarks. RBI keeps repo rate unchanged at 5.5%, sets inflation target of 3.1% for FY26. RBI Governor Sanjay Malhotra says tariff uncertainty is still evolving and impact of the 100 basis point rate cuts since February 2025 on the economy is still unfolding. US President Donald Trump is set to substantially hike tariffs on Indian imports. Tells American media that India is the highest tariff nation and has not been a good trading partner. NSDL closes over 16% higher at a market price of 932.8 rupees per share as it holds on to the gains after listing at a 10% premium. Enforcement Directorate questions Anil Ambani's top aides Amitabh Jhunjhunwala and Satish Seth. Sources say the agency will also seek extension of Parthasarathi Biswal's remand in PMLA court. Death toll in Uttar Kashi climbs to 5 and at least 50 remain missing after the cloudburst in Tharali village. Chief Minister Pushkar Singh Dhami carries out aerial inspection of the flood-hit district, says 130 people have been rescued so far. Hello and welcome back to NDTV Profit. This is Profit 360 only on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news, so stay tuned. Let's begin with checking how the markets fared today. Benchmarks closed lower for the second consecutive day with the Nifty falling again and ending near its day's low. Sensex was down 166 points at nearly 80,500 levels and Nifty was down 75 points at 24,570 levels. Most sectoral indices finished in the red except PSU banks. Nifty Pharma was the worst performing sector impacted by looming Trump tariff threats. My colleague Harsh now joins in with a detailed market roundup of the day.
Yes, so big day, policy day, but no real announcements translating, and that kept a lead with regard to market sentiment as well. 1/3% lower on the Nifty 50, and that means that all of the gains that we had made on Monday are pretty much entirely wiped out and more. Well, it was broad-based pressure that we saw. The advanced decline on the Nifty itself was quite poor. 40 declines nearly for just about 10 advances, and within the advances, two unlikely candidates. One was an HDFC Life and the other one was an Asian Paints. Both were perked up 2% at close today. So those two were the two top gainers. Among the losers, largely were IT counters. In fact, pretty much all 5 big IT companies traded 1% plus lower, and that kept a lid with regard to how IT was performing. Even the mid and the small cap IT were under some bit of serious pressure today. So across the board we saw that, but outside of that, it's the pharma basket which also took it a bit on the chin. We saw a Divi's Labs, a Dr. Reddy's, a Sun Pharma within the Nifty also under some bit of pressure. Sun Pharma closed over 2% lower in trade today. So you saw that pocket also witnessing some pressure today. So some steam being let off. In terms of the sectoral heat map as well, it was the financials which kind of insulated the rest of the market from us to a certain extent. It was the pocket where you could hide today. The Fin Nifty closed flat. The Bank Nifty was up just around 0.1% thereabouts. And the PSU Banking Index was the top sectoral gainer in trade today. Very unlikely again. And as was evident, IT and Pharma were the two top losers within the sectoral heat map. When you're looking at the advanced decline, didn't look pretty at all. Even the broader market saw quite a bit of pressure. 3:1 in favor of the declines is what we saw. And the Nifty mid cap, which was down around 0.9%, and the Nifty small cap was down 1.2%, saw some serious pressure. Of course, some big movers on the back of earnings as well as commentary. That's on the BSE 500, of course. But outside of that, broadly speaking, it was a difficult day of trade.
Right. Thank you so much for that, Harsh. A difficult day of trade, but NSDL ended with gains of over 16% after debuting at 10% premium on the BSE. Vijay Chandok, MD and CEO of NSDL, highlights NSDL's focus on digital services, trust, regulatory compliance and customer education to drive responsible investing. With value-added services becoming a key revenue driver, let's understand NSDL's vision post-listing.
See, our core services have been depository. Through the depository services, we have over time expanded them based on how the regulations have played out into certain additional products beyond equities. Debt, for instance, some InvITs and REITs, for instance, and so on. So our future is largely linked with the mission and the aspiration for nation building in capital markets. And we've been playing that role by bringing digital services, bringing trust, bringing regulation, putting regulations to work with our partners, and ensuring that customer education is brought out in a very big way, so that the right, in a responsible way, people are able to invest and grow in a sustainable manner. We'll continue to pursue that agenda and continue to add adjacencies and new products that the regulatory landscape offers us. And we will do it definitely on a priority. Having said that, the other aspect of our growth is what we call value-added services. And those have gone on to become important parts of revenue. So these are typically arisen as a consequence of offering core services. And we have seen that these are situational. You have a product, you engage with the customer. There's a technology which is evolving. Our effort as a management team is to identify this three disparate dots, put it together, and then bring out the product. And we'll continue to do.
And one of the biggest announcements of the day was the fact that Reserve Bank of India, after its latest monetary policy meeting, has kept the repo rate unchanged while retaining a neutral stance. Let's go across to my colleague Vishwanath for the key takeaways from the announcement.
Right, so the press conference was more or less a reiteration of what exactly happened before that. During the speech that the RBI governor delivered, he said that we have already given a 100 basis points rate cut. We wait till the transmission of that rate cut is passed through the economy. So they're going to wait on that. As far as the inflation is concerned, there again, 3.7% was the original estimate for FY26. That has been brought down to 3.1% now. Q1 of FY27, that is April-June 2026, the expectation is that CPI inflation will be around 4.9% because the low base effect will wear off next year. And next year you will see higher inflation. The other point was about a growth forecast for FY26. The RBI has not changed its growth forecast. That remains where it was, which is at 6.5% for FY26. That no changes even on the quarterly readings. The only additional information that's coming in on the growth forecast is Q1 data for FY27, where they're estimating a 6.6% growth on the GDP front. Liquidity surplus, of course, the current situation on the liquidity is 3 lakh crore worth of excess liquidity in the system, and the CRR cut, or the cash reserve ratio cut, that was announced in the last policy will start flowing in from September onwards. So more of liquidity will be available for the broader banking system. The RBI governor is confident about the forex reserves cover that India has. What he's pointing out is that 11 plus months of imports, merchandise imports, worth of payments is available in the form of forex reserves. Lastly, on the global uncertainty bit, what he's saying is that while global trade challenges persist, India's medium-term economic prospects are looking bright, and that's an important comment coming in because of the recent comments from the President of the United States, Donald Trump, who's talked about a dramatic increase on the tariffs. I'll let you listen to what the RBI governor had to say about the current trade uncertainties as exist?
The inflation outlook for 2025-26 has become more benign than expected in June. Large favorable base effects combined with steady progress of the southwest monsoon, healthy kharif sowing, adequate reservoir levels, and comfortable buffer stocks of food grains have contributed to this moderation. CPI inflation, however, is likely to edge up above 4% in Q4 of this year and beyond, as unfavorable base effects and demand-side factors from policy actions that we took a few months ago, come into play. Barring any major negative shock to input prices, core inflation is likely to remain moderately above 4% during the year. Geopolitical uncertainties have somewhat abated, even though global trade challenges continue to linger. Over the medium term also, the Indian economy holds bright prospects in the changing world order. Globally, policymakers are faced with muted growth and slowing pace of inflation, with some advanced economies even witnessing an uptick in inflation. As the dust settles and a new equilibrium emerges in the new global order, policymakers will have a tough task navigating a world characterized by modest growth, sticky inflation, and elevated public debt levels. The uncertainties of tariffs are still evolving. Monetary policy transmission is continuing. The impact of the 100 basis points rate cut since February 2025 on the broader economy is still unfolding.
And the government is likely to introduce the new income tax bill in Parliament on August 11th. Sources say the Select Parliamentary Committee, which was tasked with reviewing the bill, suggested 285 amendments, most of which have now been accepted. Key changes include revised capital gains rules for LLPs, amendments to corporate dividend deductions, and NIL TDS on specified transactions to ease compliance. The draft bill, spanning over 600 pages, was first introduced during the budget session on February 13th. The bill aims to replace the 6-decade-old Income Tax Act with focus of making tax laws simpler and more modern without tinkering with any tax rates. Let's go across to my colleague Shimi now, joining us on the phone line to explain the story further.
Yeah, so sources confirmed NDTV Profit that government is expected to bring the much-awaited new income tax bill to Parliament in the ongoing monsoon session on August 11th. In fact, the legislation is, in work for some time after the draft bill was presented during the budget session on February 13th. And there was a select panel who was appointed to review the entire draft bill, and they made a report around it suggesting, around 200 plus of suggestion. Now, the important part here is that the bill is going to be introduced with key amendments in line with the suggestion of the parliamentary panel, which has submitted the report already in the beginning of the monsoon session. And those amendments is with respect to, capital gains rule for limited liability partnership. Now, remember, this has created a lot of stir in the market as, it was reported that the government may increase the tax rate on some of rate to 18.5% to partnership firms. But that was actually a drafting error, which government is now rectifying, and that will be reflected in the final bill when they present it on 11th August. And other than that, there are tweaks expected in how corporate dividend deductions are handled. In the draft bill, they propose that there won't be any deduction for corporates who are, claiming dividends from other companies. So that will be also rectified. And in fact, there's a lot of confusion around zero TDS as well on certain specified transactions. That is also going to be reflected, and it's a kind of big relief for both corporates and partnership firms. is expected in the final bill. So if all goes as planned, the new tax law will come into effect from next fiscal year, that is April 1st, 2026. And we should, as we've been reporting, and we know also that this is a part of larger push by the government to, simplify the entire tax laws and replace the 6-decade-old Income Tax Act 1961.
Right, Shrimi. Thank you so much for giving us that update. And yes, we will definitely see how the new tax law comes into effect. But moving on, viewers, a day after Reliance Group chairman Anil Ambani was questioned by the Enforcement Directorate, his top aides are now being interrogated. The agency is currently questioning Amitabh Jhunjhunwala and Satish Seth, who are the senior executives in Anil Ambani's business empire. My colleague Ashwarya Patil gets us more details on the development so far.
Well, another important update that we're picking up from our sources is that Parthasarathy Biswal, who was arrested by the ED on Friday last week, will be produced in front of a special court, special PMLA court, who had granted ED the custody up until 6th of August, which is today. And they are asking for an extension of Parthasarathy Biswal's remand as we speak. Apart from that, as far as Parthasarathy Biswal's arrest is concerned, he was arrested last Friday in connection with the ADAG Group's loan fraud case for submitting fake bank guarantees of over 68 crore rupees. Now, as we speak, also inside the Enforcement Directorate, interrogation of top executives and top aides of Anil Ambani, Amitabh Jhunjhunwala as well as Satish Seth are being interrogated and questioned related to the whole 17,000 crore loan matter. They have been senior executives and have been closely associated with the company in terms of their financial dealings as well as operations over the last couple of years. ED, of course, had identified 25 executives during the previous searches and investigations that have been done in the last couple of weeks or so. Remember, yesterday Anil Ambani was interrogated by the ED for over 8.5 hours, rectifying and recording all of his statements on Tuesday as far as this case is concerned. So we'll keep you posted on the latest and bring you the updates as far as the further developments are concerned with respect to Amitabh Jhunjhunwala as well as Satish Seth.
Right, Ashwarya, thank you so much for bringing us those details. And now moving on, viewers, the grand Indian AI reset. It's here, whether we as employees like it or not. However, there's two sectors specifically that have faced the heat with major layoffs that took place in FY25. That's FMCG and IT. Let's take a look at FMCG first. As per an analysis done by NDTV Profit, FMCG companies have trimmed their permanent workforce by 10% in FY25, driven by senior roles. Experts say that there has been a 25% dip in demand for senior level roles, and this is largely due to a mix of factors like AI reset and economic uncertainty. To tell us more about this, let's bring in my colleague Sessa with further details.
India's FMCG sector is undergoing a major talent reset as companies grapple with intense competition, rising costs, slowing growth, as well as the increasing influence of AI and automation. Major players like Hindustan Unilever, Dabur, Nestle, and Godrej Consumer are trimming their workforces, restructuring teams, and scaling back hiring, especially at senior levels. For instance, HUL reduced its permanent employee count by nearly 8.5% in FY25. Dabur reduced hiring by 6%, while Godrej's total employee count shrank 13% during the year. Now, experts attribute this contraction to economic pressures, slower than expected urban demand, and strategic shifts towards productivity. Many firms are consolidating leadership layers, with senior roles like brand and category heads being cut by over 25%. Meanwhile, hiring for entry-level roles, particularly in digital marketing, e-commerce, and data analytics, is on the rise by about 5 to 8%, reflecting a focus on specialized skills over generalist roles. Top-level leadership changes are also rampant, with companies like HUL and Coca-Cola recently appointing new CEOs and MDs, signaling a push to shed outdated traditional strategies and adopt a more competitive, digitally driven landscape. Looking ahead, the hiring outlook remains cautious, with a focus on leaner structures and skill-based roles, especially as AI and automation continue to reshape the industry. Experts warn that while traditional giants still hold major market share, regional and digital brands are steadily eroding their dominance. That's the latest on India's FMCG talent shift.
Right, thank you so much for bringing us those details, Tessa. And moving on, let's get you some insight into Raymond Realty's Q1 performance. Now, Raymond Realty has seen a downtick of 50% in terms of how the bookings have fared out. Collections are down about 23% as well. However, the total growth development value stands at roughly 40,000 crore rupees. The company maintains a net debt-free status with 233 crore in its net cash surplus. Now, we spoke to CEO and MD Harmohan Sani on the growth guidance for the next 2 to 3 years on the pre-sales front. Let's listen into that.
You should expect about a 20% year-on-year growth from us in terms of top line, and also you should expect about more than 20% ROCE from the company. So the returns will be pretty healthy, the growth will be quite healthy. And like I mentioned last year, even though the guidance was 20%, we gave a 45% growth. So we hope to do much better than the 20% guidance that we have given. But that's the minimum market can expect from us.
Bajaj Auto's Q1 earnings came in line with estimates. The company's revenue from operations grew by 5.5% to 12,584 crore rupees. The bottom line too rose by a similar band, recording a 5.4% rise at 2,096 crore rupees. Margins, however, narrowed by 60 basis points to 19.7% from 20.3% earlier. Premium motorcycle brands like KTM and Triumph together sold over 25,000 bikes domestically, marking a 20% year-on-year growth. Electric vehicles emerged as a significant growth driver, accounting for more than 20% of domestic revenues for the company compared to early teens in the same period last year. Internationally speaking, Bajaj Auto's Africa, Latin America and Asia business saw broad-based double-digit volume growth, but business in the Middle East and North Africa remained muted due to geopolitical challenges. And a big national story this evening. The death toll in Uttarakhand cloudburst has touched 5 and about 50 people are missing. 150 people have been rescued so far. State's Chief Minister Pushkar Singh Dhami took a stock of the flood-hit areas of Uttarakhand district. The MET department has issued a red alert in the entire state and a weather warning in Himachal Pradesh. Let's go across to my colleague Ankit Tyagi for a detailed report on the flood-hit region.
Now, for that, we were speaking to a few people, from the BRO and the GRE. They are saying it can take up to 4 days for even a temporary structural bridge to be made and this road to be in some situation that vehicles can pass from here. This has completely caved, from this very moment. And it reminds me when I had come to cover the 2013 Uttarakhand flash floods, the Kedarnath tragedy. At many places, the road literally just vanished, and we are seeing something similar here as well. Now, a lot of people, those who have faced, a lot of difficulties, and what we are going through, it pales, and my heart goes out to all those who have been severely impacted, stuck, missing in these flash floods in the village in Harsil, in other places. आपका यहाँ खेत है?
मैं पंडित सुनीत सारोतड़ी ग्राम भटवाड़ी से सरपंच भी हूँ। यहाँ पे भटवाड़ी गुडाला नाम का एक तोक है, कहा जाता है, जहाँ सड़क ढसकी है और ये बिहार वाले ऊपर की साइड को और काट रहे हैं, हमारे यहाँ पे खेत का नुकसान हो चुका है।
आपका ये खेत है और वो उससे मिट्टी नीचे ला रहे हैं?
मिट्टी भी चला रहे हैं और इनको सारे हमारे ऊपर से खेत जो है पूरा नुकसानदायक हो जाएगा। इसकी प्रशासन पर इसकी जांच किया जाए, यहाँ पे जो है आए और
पर लेकिन सड़क का कोई रास्ता नहीं है तो उनको मिट्टी ला के निकालने की कोशिश कर रहे हैं,
काटने की कोशिश कर रहे हैं, लेकिन ये मलबा नीचे डाल के खेतों का मलबा जो नीचे डाल रहे हैं।
आगे और कितनी जगहों पर इस तरीके से सड़क बिल्कुल खत्म है?
हाँ, आगे सड़क पूरी खत्म है, आगे जो है पूरे सारे इलाके जो धराली से पूरा नुकसान हुआ है। वहाँ भी काफी लोग जो है दबे हुए हैं, कोई आशंका नहीं हो रही कि कितनी गिनती हो रही, कुछ निकाले गए। और उसके बाद भी रिंगालाग जो एक पुल टूटा है, वहाँ पे लोहारी नाग, वहाँ पे सारा पुल बह गया है।
And viewers, our sources to NDTV indicate that PM Narendra Modi is about to visit China. Remember, this is his first visit after the Galwan clash, and the intention of this China visit is to attend the SCO meeting. So therefore, this news coming in is important. Remember, the visit is ambition towards China as well as Japan. And as I mentioned before, that this visit comes after his last visit, which was during the Galwan clash, and the intention of this meeting is to attend the SCO meeting. But with that, viewers, we have run out of time on this edition of Profit 360, but do stay tuned to the channel as we continue to give you a lot more important news stories, and so stay tuned.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. You're watching KYC. Here's a stock that from maybe the 7th of April has rebounded extremely sharply. It's given a 50% return to investors. It's an interest rate sensitive company as well. We've been very conscious of the fact that today is the big repo rate decision, and while there's been no action there, we've seen plenty of action with regard to the repo rate over the last 3 meetings that the MPC has had. So we've kept that in mind when we've slotted this one. We're going to talk to Prestige Estates. No small company. It's a sub 70,000 crore market cap company. So it's quite a large company in relative terms. Now what I want to know, and the first thing I'm going to start off with is with approval delays. We've seen approval delays happen in FY25, which has dragged the numbers a little bit, including the cash flow number of the company for FY25. Because there's been that inventory build-up. Are we seeing an unwind? The reason given for the approval delay was elections, and a lot of that would hopefully start unwinding in FY26. I want to know the extent of that and how will that impact the numbers. The second one is demand sustenance. We've seen very, very strong demand already in this space. Also, there has been a build-up of inventory in Hyderabad. Why is that so? Can we possibly see an unwind there? Is there a demand problem there? I want to understand some of those pieces. In terms of pricing, now that too has seen extremely aggressive increase in terms of the realizations. Is that sustainable? Are the average realizations at the current juncture, is there an upside surprise even from here? Are they going to sustain at the current level? What's the trend that's playing out? Update on the hospitality demerger business. This could be a big value unlocking opportunity for Prestige and its shareholders. Expectations with regard to margins. What's the risk of construction inflation coming in and impacting the margin number will be the other piece I'd want to understand. Funding of the very large 20,000 crore capex that they have in terms of a pipeline over the next 3 to 4 years. And how is the luxury market doing in terms of demand? Is that demand holding up? I'd want to understand all of that. I'm Harsh Saita, with me is Anushi Vakharia, and we're going to take you through the next half an hour on Prestige Estates, and she of course tracks realty extremely closely. Let me start, Anushi, with what the company does, and then probably I'll hand it over to you for a little bit of those factors. Let me start off. It's a real estate company, but it was founded way back 1986, has 39 years of history. It was traditionally a Bangalore-based company, has now diversified into 13 locations in India, has completed over 300 projects, spanning a developable area of 20 crore square feet. That's quite large. It's completed over 150 residential projects. But what does it do? It's diversified. So 150 residential, but there are plenty of commercial and other opportunities as well. So the diversification comes from residential, office, retail, hospitality, property management and warehouses. All of that is what it covers. Now maybe some of these are smaller parts of the business, but at least the top 4 are large parts of the business: residential, retail and office, hospitality. Those 3 are huge. In terms of the projects which are ongoing, there are 63 projects which are ongoing at this point. That's the split between residential, commercial and retail on the ongoing projects. The upcoming projects, there are 69 upcoming projects as well. So this is no small player within the real estate market. It's spread across the top cities of the country and has an extremely large presence and multiple projects which are ongoing at the same time. That's the upcoming projects, which is 69 projects which are upcoming broadly, and that's the split with regard to that. Let me now talk about this is the FY25 geography split. This shows the largest market is Bengaluru, which is 45%. Mumbai is then 30% of the market, Hyderabad is 23%, and then 2% is the rest. I want to also understand whether NCR is going to become something of a large market for them, because they ventured there, but they're playing small at this point, Anushi.
They are coming, they have launched the Indirapuram project. That's the prestige city that we are looking at, and it's a big one. You know, if you just look at the pre-sales number that we'll discuss later, that would reflect just in the mix itself, 59% of the geography split now coming from NCR, then Bengaluru followed by about 20% or also, and Mumbai having a 12% of a chart over here, and the rest followed by with a 5 to 1% of a mix, right?
Viewers, for perspective, the earlier chart was FY25, the current chart is Q1 FY26, and that shows the tilt that NCR has suddenly had. Now, question of course is, this is a one-off quarter, and generally in real estate it's chunky.
Yeah.
But of course it's starting to add up. It's starting to reflect.
Would be, besides the south markets, now how would the market share in these other markets develop going forward?
Absolutely. Absolutely. But land bank, Anushi.
Yeah, if you talk about the land bank now, currently, this is a big figure that we are looking at. It has 825 acres of land bank. And in fact, prestige share in this is roughly around 704 acres or odd so. So it's not certainly a small amount of land bank that we are looking at. And this is, of course, in the next like a long period that we are looking at, so that would remain interesting to watch out for how the launch pipeline is, considering not just this year, for the next 5 years or so as well, right?
Yeah, absolutely. So execution will hold the key. We'll also have to see how many launches come through, as Anushi is saying, but the land bank is obviously large, and of course there was a period of time in the 2000s when most real estate companies were valued just on the basis of land bank. Right, now it's shifted more towards pre-sales, but back then as well, the land banks were really the metric to say that there will be growth, and hence the land bank becomes important, but not as important, and we realized that between 2010 and 2020 as the pressure on real estate mounted. But now of course we are in a favorable cycle, and therefore prestige could well be on the list of stocks you want to keep on your radar, because you're in that favorable cycle for the next few years, and there is diversification in this one as well. Let me start off with the metrics as well. Let's talk about the 8 metrics we'll talk about. We'll talk about the operational metrics first off, as we would within real estate companies. Then you have the income statement, balance sheet, cash flow, everything else remains the same. We'll look at shareholding pattern, street cred, street coverage, and outlook. That's how we'll space it up. We'll also give you a little bit of color on valuations. And we will also try and we'll get you perspective, of course, from the management when we speak with Mr. Irfan Razak, who will be joining us in a few minutes from now. Let me though allow Anushi to start off with the operational numbers as well as the income statement. I've spoken enough, Anushi.
Yeah, right. So I'll start off with the key operational numbers that you look at, and as Harsh emphasized on the pre-sales number. Now, if you are looking at pre-sales in the last 3 years or so, we have looked at a strong growth trajectory here, 90% or even 63% of a growth that we'd seen in FY22 to 24. But FY25, if we look at now, that was a blip considering that there had been approval delays which led to the launches being deferred to FY26. As we've seen about a 19% of a downtick in the FY25 period, the target being 24,000 crore or so of pre-sales, but the company clocked in about 17,000 crore. Collections, if we see, that has also remained on the healthier side, but FY25 again almost flattish kind of a collection growth that we are looking at. But what is surprising is the average realizations, which have continued to clock in that double digit of a growth. In fact, if you look at FY22 to FY25, the realizations have in fact doubled from 7,500 per square feet to 14,000 currently. Launches also, if we see now, launches in FY25 added to about 14 million square feet. But if you take the first quarter in perspective, they've launched almost about 14.94 million square feet in the first quarter itself. So how the launch pipeline would be for FY26 is something that we should be watching out for. But Q1 FY26 in general has been a turnaround for the business. If you look at the pre-sales, they were up around 300%, collections up about 55%, even in average realizations and area sold, we are looking at an uptick. This is on account of the strong project launches that have happened. First, the most prominent one being the NCR one that we just spoke about earlier as well. So this is the kind of picture that we are seeing in the key operational metrics. It's a thumbs up if we take the long term in perspective, and FY25 being a blip year for the business. But of course, emphasis would remain whether these approval delays are still a factor which is playing on or not. In terms of how the income statement has shaped up now, we'll cover this in very brief, since we are looking at a lumpy set of numbers when it comes to real estate companies. Revenue has seen about a 5% of a CAGR growth in these 3 years period that we are looking at. Margins more or less have remained in the 25 to 35% of range. The company did say going forward that the new acquisitions that they will make will enjoy a margins of 30 to 35%, while net profit stood at 617 crore at the end of FY25. So Harsh, this is the overall picture that we are building in terms of how the operational metrics and the income statement has been over the course of FY22 to FY25, even the first quarter now being in the recent focus.
Right. Anushi, let me throw in a question here. Any concerns with regard to the Q1 FY26 numbers as you see it?
If you look at the Q1 FY26 numbers, in fact, it looks like a turnaround for the business, considering that there were issues in FY25. But now the company, even if you look at the margin numbers, that has been in the range that the company has given. Revenue is also up around 24%. But of course, it's the key operational numbers that we are looking at, and we are looking at strong set of numbers coming in from here.
Sure. So Q1 FY26 was decent, even though the stock not really reacting to that. Let me look at the balance sheet now. And your equity has gone up in FY25 because they did a 5,000 crore equity raise there. As Anushi did point out, FY25 was a year where you did see some headwinds, which has impacted the numbers, and therefore the equity raise was necessary. The book value currently stands at around 15,000 crore, as you can see, and its market cap is around 70,000 crore, which we've spoken about. The borrowing is at around 10,600 crore. So yes, the borrowing number is elevated compared to the equity or the book value, but basis the market value is still okay. When you're looking at roughly just the profitability metrics on an annual basis, the cost of borrowing is around 10%, and the net debt to equity is around 0.4 odd %. So the net debt to equity number is roughly 6,900 crore, which is also elevated because on even if I ignore FY25, if I take FY24's EBITDA number, that's around 2,500 crore. The debt servicing will require nearly 1,000 crore at 10%. So therefore, you want to be cautious with regard to how the balance sheet is playing out and how the cash flow numbers will play out with regard to Prestige. And let me also look at cash flow actually. Anushi, I'll take this one as well.
Yeah.
The cash flow from operations fell in FY25. And understandably so. We spoke about those trends playing out, even though the EBITDA was 2,558 and therefore really not translating to net cash in terms of even operationally something substantial coming in on the operating cash flow front. So both of those headwinds being seen and being faced, cash flow is certainly something that even analysts as well as us, we're all looking at, and investors should also keep a watch on with regard to how cash flow pans out. But shareholding, Anushi?
Yes, so in terms of how the shareholding has panned out, in 23-24, we've seen about the same sort of a mix in terms of where the promoter holding is concerned. 65.5% is the mix that we are looking at. Now, taking the recent June 25 in picture, that stood at 61%. Of course, the equity raise also that took place last year playing into effect over here. FIIs hold about 16% as of the end of June 25, while DIIs also have a significant stake at about 19.6%. So, overall, if we see, it's a thumbs up given that, it has more or less remained stable in terms of all these three promoters, FIIs and DIIs holding that we are looking at. With that, I'll also quickly cover the street cred which is there. Now, if you look at how the performance has fared out for the business, in the 1 month or so, we have seen about a 2% of a downtick. 6 months, the stock, as Harsh did say in the start also, that from April it did see some recovery. 17% is kind of gains that we've seen in the last 6 months or so. But 1 year, the performance has been lackluster, considering the previous headwinds which were there for the business in FY25. -3% is the kind of return for the shareholders, but for 5-year periods it's been an absolutely multi-bagger for the investors, holding it 7 times the returns that we are looking at. So Harsh, that's the picture that we are building for these two metrics.
Perfect. Analyst recommendations, a clean thumbs up there. 18 buy calls, just 1 hold, 1 sell, 18% return potential, no concerns there, nothing to justify. Outlook ahead, well, you're looking at FY26 pre-sales in the region of 25 to 27,000 crore. Very, very strong guidance on pre-sales for FY26. Given the slightly lackluster FY25, we've seen GDP pipeline is also strong. Management is targeting a margin on fresh acquisitions of around 30 to 35%. The otherwise margin guidance is 25 to 30% aspirational. That's really the thought process. Free cash flow from ongoing plus completed projects, very important metric when it comes to valuing real estate companies. 21,000 crore versus the 68,000 crore number that we have for with regard to the market cap, and around 50,000 crore is the GDV number versus the roughly 70,000 crore market cap that Prestige currently trades at. Let's stack up therefore all of the metrics and give Prestige its final rating. That's how it stacks up on all of the 8 parameters, and on a final rating it gets a very, very healthy 5.5 on 8 on our KYC ratings. But let's go across. We have Mr. Irfan Razak joining us this morning from Prestige. Sir, firstly, thank you so much for doing this. I want to first start off by understanding from you, sir. We've had more of a macro question, because just given the setup today, it's good to have that perspective from you. We've had 3 rate cuts back to back, 1% shaved off from interest costs for your customers. Are you seeing, versus January, are you seeing positive momentum in the last 2 months when it comes to business? Is it picking up, or does it not impact your customers, or is it status quo?
No, obviously rate cut does help the customers. It makes the product that much more affordable, in the sense that they can buy a more expensive product, they can take a larger home loan. So that helps the cause, because as it is, real estate prices, because of all input costs going up, have gone up, and the rate cut has helped them to at least buy their dream home without really getting into any sort of stress. So, and the business goes on as usual. And I believe that that is a very, very big plus. Even today, I think the RBI has just kept the same numbers, and which is, I believe, the right way to do things. And in the long term, I think things will stabilize, and it will help the business as we go along.
Mr. Razak, this is Anushi joining in as well. Another macro question to you before we talk about the company-related questions is about the luxury market in general. Now there's a debate across the industry that we are looking at, that if we are taking this year in consideration, there are expectations of now there being growth slowing down as compared to what we have seen in the last 2 years or so. This is in terms of how the launches have been, how the growth has been. Just want to understand your perspective on the same.
See, we first of all need to know what we defined as luxury. Now, according to me, luxury is anything above that 3 crore brackets, getting into 5 crores to 50 crores, the premium. Maybe it's gone above that also in a city like Mumbai. So now, but if you ask me, the market which is evergreen and which always where there's a need and the demand will be constant is in the mid market. That is that 1 crore to 3 crore range of product. And as we go along, as we go higher, and the luxury market is a very small niche market. And that is a different breed of buyers that are there in that market. And honestly, they don't have any urgency to buy. They will buy only because if they like the location, if they like the product, and then for them, price is the secondary item. So we really can't compare that at all. And that's not a benchmark. For me, the benchmark is as long as the mid-market is doing well, as long as job creation keeps happening, and as long as interest rates hold, and I believe that we'll keep selling. And that's where the business will keep coming from. Yes, we are present in luxury in cities like Bangalore, Mumbai, and as well as in Hyderabad. And those cities do give us that business, but it's a small percentage of the overall business that happens in our company.
Got it, Mr. Razak. So, last year you saw some delays with regard to approval. Give us some color on what's happening this year. Has there been a bit of a change? Has there been a sea change? What's happening on ground?
See, now last year the delay of approvals is because the entire official machinery was busy with central elections, state elections, and all of that. That is behind us. According to me, see, there's a very, very defined code that is there in all the cities that we operate in. Everybody knows that what's the type of approval you can get on a particular piece of land based on the roadway, based on the location and all of that. And if we are designing our product accordingly, it's a procedural thing that keeps happening. And sometimes things move a little slower than required. But then I think in a normal cycle, approvals do take time because there's just not the final approval that has to come submitting it to the authorities. You have to get at least a dozen clearances, NOCs, including environment, fire, and so on and so forth. So all that takes time. So I think from the time we touch a piece of land, do the planning, and then bring it to the market, it takes at least a good 15 to 18 months.
Mr. Razak, just with that, if you are looking from what has happened in the first quarter, we are looking strong set of numbers in terms of how the pre-sales have been, how the collections have been. Of course, emphasis being more on the NCR region as well with the launch of the project over there. Just want to understand your sense in terms of how FY26 is expected to shape up. What is the kind of GDP potential that we are looking at in terms of new launches which are there? Along with that, you've achieved almost 12,000 crore or also pre-sales in the first quarter itself. So with that, do you see a revision in terms of the guided number which you've given for FY26?
I mean, it's what we guided in the beginning of the year was around 25,000 crores, of which we've done almost half of it in one quarter itself. Now, what does it mean? It means that there is more potential, and we have to bring in more product into the market. Currently, we hold an inventory of about 20,000 crores, and we have a GDP in the pipeline of another 42,000 crores. That takes the entire stock that will come in eventually at 62,000. But that now it all depends on how quickly I can bring in that 42,000 crores to the market. And that is where all the approvals, that is where the RERA clearance, all that plays a part. Any slip, one or two projects get delayed. That means that 42 will spill over to the following quarter or following financial year itself. So it's a matter of how quickly our teams can bring these properties to market. And if we are able to, and I certainly believe that once we launch, we normally sell between 30 to 50% in the first quarter of launch itself. So that since the market is still good, it's robust, there is demand, and and our locations are all fantastic, and if we price the product right, I don't see any stress in achieving that target or exceeding that target. At least this year, we will definitely surpass the target that we have guided for.
with this, the 42,000 crore of GDP pipeline that you just mentioned about, I just want to understand, like with this, how the other metrics are expected to shape up as well. Collections in FY25, while we did see about flattish kind of a growth, how is the trajectory for FY26 that you're looking at? And is the pricing growth also of this double digit expected to continue with this?
See, now, as far as collections, this quarter has been the highest collections that we have done in any single quarter, and it's around 4,500 crores. Again, it's a function of the sales that have been done and a function of the pipeline collection that has to come. And I believe this will be the trend for the next 3 or 4 quarters. If we launch more, sell more, obviously the collections also will be higher. And if you ask me, pricing, I believe pricing have reached a certain peak, and I personally wouldn't want the pricing to go too high too fast, because then it breaches the affordability barrier. So we would like to see, if there's pricing, it should be linked to inflation, it should be linked to the overall input cost, and it should not be a speculative pricing, which will eventually hurt the sentiment and the company.
So the other big piece within the Prestige setup is with regard to hospitality. How quickly can the value unlocking happen?
See, the good news is we had filed a DRHP in April. Then we got clearance just about a week back with certain comments. Those have to be addressed. In the meanwhile, the teams are on road shows and trying to get the investor interest. And if everything goes well, we should be able to conclude this entire hospitality IPO by mid-September.
And so are you comfortable from a cash flow perspective? No concerns there? Sorry, sir, I just have 10 seconds on this one.
No, we have always been comfortable on cash flows. I believe that there is a healthy cash balance that the company has, and also the sales are also there. So there's a big collection pipeline. Where the capital is required is all for our capex projects like office or retail and hospitality. Now with the unlocking of hospitality, even that particular asset class will be a separate company and will stand on its own feet. And eventually even office and retail, once we come to a critical mass, we believe there's a huge potential to unlock the value. And it's a game plan and a strategy. I believe that the company is only getting stronger day by day.
Excellent. Thank you so much, Mr. Razak, for coming in and chatting with us. This has been truly meaningful. Thanks from Anushi and myself, and viewers, frankly, out of time on this one. From Anushi, myself, everyone who puts the show together, thanks so much for watching.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, the headlines that you've probably read through the day will tell you that the Reserve Bank of India kept the interest rates unchanged. And you probably heard RBI Governor Malhotra talk about why that was. Everything that he said with regard to the inflation, that is the rise of prices in the country, to the expectation of economic growth. But ultimately, I'm sure the question that you're asking is, mujhe kya? Why should it matter to me? Well, it does matter in the form of your investment strategy, and it matters in the form of any loans that you might take. So that's what we're going to talk about today. First and foremost, though, we are in conversation with two managers of fixed income in mutual funds in India, and we'll talk about what they made of the policy and what their expectation is going forward. Join me now is Mahendra Kumar Jaju, who's a CIO of fixed income at Mirai Asset Investment Managers, and Mansi Karia, who's the Associate Vice President and Fund Manager Debt at PPFAS Mutual Fund. Thank you so much to the both of you for taking the time. So it was a bit of a divided house here, I must say, and I'll start with you, Mahendra. We were anticipating, some of us were anticipating that they would do one more 25 basis point cut, front load it, and then shut shop. But they didn't do that. They paused because they said that they wanted to see this pan out for a little longer. But ultimately, was this along the lines of your expectations?
So, I mean, just for records, our expectation was that there will be no rate cut in this policy, and the statement today by the governor was exactly in line with his guidance in the previous policy. So therefore, I would say there is a fair amount of continuity in the policy today, because he mentioned in the last policy that whatever space is available for the rate cuts has already been upfronted. And therefore, to the extent that inflation was lower than the projections in the last policy, or that the growth projections have been somewhat revised downward, was already factored in the last policy consideration when they upfronted the rate cut to 50 basis points. And since the last policy, every time there has been a public comment from the Reserve Bank, they have always spoken about the Q1 FY27 inflation projection, which was at above 4%. And that has not changed in the current policy or today's policy also. So therefore, I think there was a little bit of gap between those who are expecting the rate cut versus those who were not, that the current fall in the inflation was already factored in that upfronted rate cut, and the forward projections for the inflation have not changed. On top of it, there has been heightened global uncertainty because of the ongoing, the recent development of the escalation in the tariff negotiation bottlenecks that is currently witnessed between India and the US, as also the fact that the Fed has still not given any definitive signal or a more comforting signal of possible rate cuts in the coming policies. So I think while there was a strong case purely based on domestic factors to cut rates further, I think there is still a huge amount of uncertainty on the external front, and that's where I think the next rate cut will have to wait. If there are more favorable developments on the external front, then I think the domestic environment maybe will want to or maybe warrant a rate cut in the next policy or the policy after.
Yes, interesting. Because the RBI governor, in fact, saying in a press conference that they don't have enough data, they don't have sufficient data to revise their GDP forecast at this point. And that is a pretty clear statement. Mansi, I'll come to you. So from that perspective, let's take the conversation forward a little bit. Not this time, but maybe next time. And where do you see the culmination of the current rate cycle? In that, how many more rate cuts do you anticipate, and where do you expect the repo rate to settle?
Thank you very much for having me in this show. I think RBI will wait for the transmission for the 100 basis point cut they have took in the last 3 policies, and the rate cut comes with a lag. The effect will come with a lag. So RBI will probably wait for the rate cut, and the tariff related risk has already priced in their growth projections, since they have not increased their growth projections for financial year 26, and it is unchanged at 6.5% in spite of inflation cooling down and the increase in the global uncertainty.
Okay. So
we expect a couple of rate cuts by the second half of the year, and it again, as Chaju sir said, it is mainly data dependent how tariff uncertainty and the negotiations fare.
So Mansi, just confirming, you're expecting repo to settle at 5%, right?
Yeah, by the end of the year, but I don't expect the rate cut in the next policy also. I think RBI will further depend on the wait for the transmission of rate cuts for a couple of more policies also.
So then let's talk about what happens next, because ultimately the market moves ahead of what actually is occurring. It moves on expectations like anything else. So where are the opportunities, Mr. Jaju, on the fixed income side? How are you positioning yourself and your portfolios? And I would like you to talk to us also about the hybrid strategy, because let's face it, I think a lot of investors have gravitated towards hybrid in order to get their fixed income exposure. They don't go into pure fixed income anymore. And I think that's a little tragic, but then that's a conversation for a different day. So what is the strategy right now?
So I think when we talk about the strategy, let's break it down into 2 parts. Okay, first part is that whether there is a possibility of further rate cuts in the rest of this year or in the first half of the next year. And then if that rate cut happens, then what would be the possible impact on the market? As I mentioned earlier, that on the domestic front, it is very likely that the GDP growth rate will eventually turn out to be lower than the current projection. But as Governor said, at this time, there isn't enough data to support that, and that is correct, because analysts can project and revise. RBI has to be very, very careful in giving any projection. So it is natural that they will wait for more definitive data, whereas the market can maybe take an early call, which can go either way. So assuming that the growth slows down or the inflation remains low, or the tariff-related uncertainty is resolved positively, and that would definitely open up a space for a rate cut. So therefore, there is a contingent event of external positive environment for the next rate cut to happen. We don't know how it will resolve, but I also expect that it will be resolving in our favor. Now, the second part is that in the last policy, when RBI said that there isn't much space to cut rate, the market reacted somewhat in a classic, copybook fashion, as I say. So what is the classic copybook fashion that I am talking about? When the Reserve Bank or when the central bank starts cutting rate, the yield curve tends to be very flat because the long end has already expected a rate cut cycle to start, and therefore the long-term rates have come down. When the central bank approaches the end of the rate cut cycle, the curve starts to steepen because the long end has already priced in. The short end starts reacting to the immediate action by the Reserve Bank of cutting rates and injecting liquidity. So once the market sensed that there isn't much space for a further rate cut, this is the classic copybook play that happened. The short end has corrected. Governor mentioned that the transmission of the policy has been very successful. The deposit rates have come down by about 80 basis points. The lending rates have come down by 65 basis points. Given the rigidity and the complexity of our system, that's a very massive transmission that has happened in such a short period of time. So most of the action happened at the short end of the curve. The short-term rates came down up to 1 year, 3-year rates came down, but the longer-term rates did not come down. Now, what happens when there is a additional rate cut, let's say in the next 3 months, 6 months, or 9 months? If the previous rate cut left very little space for additional rate cut, the next one is most likely going to be the last one. And therefore, in terms of the pricing of the yield curve, or as we say, in terms of setting the term structure of the yield curve, that last rate cut would not be very material from the long end perspective. Therefore, for projecting the long-term rates from now on, we have to look at factors beyond the rate cut alone. So that would be demand and supply balance. That would be the global interest rate environment. That would be the impact on, say, for example, trade deficit, or impact on the balance of payment because of global environment, including the tariff and other geopolitical uncertainties. And we have seen next to zero demand, or let me say very poor demand from the insurance companies and the pension funds in the last couple of months since the last policy at the lower end. In every single auction, the Reserve Bank has also given the market demanded yield. There's not been a single development in the last auctions, which could have indicated to market that there is a possibility for the rates to come down. So therefore, I think since the last policy to this policy, every signal that has come from the regulators has been to focus on the transmission at the shorter end of the curve and wait for more clarity at the longer end of the curve. And, right. So just to conclude, therefore, I would say that the time for long duration or heavy duration strategy is possibly over. We had a very good couple of years in the last 2 years. Now I think investors should focus on the accrual strategy, which means low duration funds, short duration funds, and those type of funds.
Okay, interesting. And that really is the key takeaway of this conversation as well. I wonder, Mansi, if you concur, and where do you find the sweet spot currently on the yield curve? So where are you deploying funds incrementally?
So current corporate bonds are at a sweet spot of 3 to 5 year corporate bonds, where the credit spreads are very high and it is at the steeper end of the curve. That's where we find it attractive as of now. But over the long run, 3 to 5 year, the accrual strategy with a mixture of SDLs and corporate bonds, that's what we are looking for the opportunity.
Okay, all right. I think we've set the context well for the next chat, and thank you so much to the both of you for taking the time. Mr. Jaju as well as Mansi, thanks so much for joining me on today's program. All right, so you will be forgiven for finding some parts of the first conversation a little bit technical. But there are a few things for you to bear in mind. If you're not an economics student or a student of finance, then simply put, when you're talking about a corporate bond or a government bond, the yield, that is what you get through the interest, and the price, which is what mutual funds, or you in fact, but mostly mutual funds get when they buy and sell, is inversely proportional. So if the rates are going down, that is, if the Reserve Bank of India is cutting interest rates, then the prices of bonds that are already issued will go up. And generally, if you've already bought those bonds, you will make capital gains. The flip or the opposite of that is also true. That is the crux of the conversation. And what we learned from that first conversation is that there's likely to be maybe 1 or 2 more rate cuts in the rest of this rate cut cycle, possibly over the next few months. And what that means is that a large part of the gains that you have accrued have already been done. There's unlikely to be too much on the table for you to gain from this point, so you should gravitate towards the shorter end of the spectrum. Let's talk about what that means. I'm joined today by Karthik Zaveri, Director Investments at Transcend Capital. Karthik, I hope that I've explained it in a way that most people will understand. But I know that you're a whiz at this, so maybe you'll do a better job than me. Would you say that my interpretation is correct, that you should now gravitate towards the shorter end of the spectrum, and what options exist from a fixed income standpoint to do that?
So, yes, you're absolutely right, Alex. I mean, that is true. At the same time, for all the viewers, whenever the interest rates are going down, it's basically good news, because you may feel a little shortchanged because now your deposit is going to earn lesser. Your debt mutual fund is going to earn a little bit lesser and all of that, which is okay. But having said that, when rates go down, your home loan rate goes down, profits are higher for companies. So when you invest in equities, those profits are going to be higher and all of that. So it's always an all-round good news when the rate cut happens. And I was hoping that, a rate cut happens, because we do have a very strong trigger in the name of tariffs right now, where Indian companies really need to focus a lot more on manufacturing and doing it at home. And if they can, get money at a slightly cheaper cost, right from the retail guy to the SMEs to the large corporations, I think it's an all-round good thing to have happened. If it's not happened this time, let's hope it's going to happen next time. But the cycle has definitely begun. So if you want to start making investments in this, okay, then this is a good area if you want to, earn from corporate bonds and government securities. Like Alex said, there is a little bit of risk there. I mean, if it goes against you, but now we are looking at a downward cycle. So it's only going to be a profitable investment to do.
Okay, but would you agree that most retail investors have now gravitated away from pure fixed income and moved towards hybrid strategies because of the tax treatment? And given what we know so far, what kind of investments would you say make sense to take advantage of where we are in the rate cut cycle with only 1 or maybe 2 more left?
Right. So having said that, yes, you're right that people don't like that, but it's not so much, in my view, because of tax. It's more because the returns itself are about 6%, and which is in line with inflation, and that does not really help anybody's cause. So which is why people want to do hybrids. People have always wanted to do things like balanced advantage, which is like a conservative hybrid, so that they can at least earn about 8-9%. Tax treatment is efficient with those products because you get the benefit of long-term tax when you hold it beyond a year, because they are classified as equity category. Then there are also, for the ones who want to go even to 10 and 11 and 12%, go to hybrid aggressive category. So that's also something that people are looking at. And the best advantage to be taken from a falling rate cut cycle is equities, because see, what happens is the effect comes after about 2-3 months. The moment interest rates are cut, everybody benefits. If you are looking to buy a house, then you will be motivated to go and get your loan right now, because your interest outflow is going to be lesser. If you are motivated to raise a loan, your cost is lower. The same applies for a company. With interest rates going down, there is profitability increase for everybody because the interest itself is saved. So money saved automatically is money earned, and that is a benefit from the retail investor to a large corporation. So which is why I think you can look at all investments across the board. Even if you want to do gilt funds, if you're a pure debt fund investor, even a gilt fund is probably a good idea at this time.
Gilt fund being a government bond fund, which only invests in government bonds. Karthik, the question is on repricing of loans as well. So a lot of viewers have home loans that are pending. They have a few other loans as well. What advice would you give on the repricing, and particularly if you are on, for example, the MCLR, which is the erstwhile way of determining the rates, which is the marginal cost of funds lending rate, which takes longer for repricing to take place. So if at all transmission has not happened and rates have not gone down on loans, it's likely that you are on MCLR. So what advice would you have about going to the bank and saying, hey, give me a better rate?
So first thing, you need to look at your loans regularly. Each time there's a downward revision, you need to go and check with the bank whether this revision has happened in your account. If it is not, they also give you the facility of making a small payment and shifting to the new system, by which you get an immediate impact. As soon as the rate cut happens, within about a week's time, you get the intimation and your loan is also repriced. If it also doesn't happen, nothing to worry too much. But in a month or so, in a 2-month period, they will do the rate adjustment. But it's good time. So at this time, don't be in a hurry to prepay, because now we are looking at a good another 12 to 18 months of a down cycle in interest rates. So you will be saving automatically on interest costs. Your tenure will be coming down on its own. So don't be in a rush to prepay. And the fund that you might have earmarked for prepayment, if you are conservative, maybe consider corporate bonds and government securities funds. And if you don't bind the equity risk, can hold on for about 5 years or so, go to equities, because equities will also turn around. And we are at a very interesting time. We've had a sort of a correction. And as soon as this uncertainty with tariffs and all that moves away, you will see that, the stock market will reverse and you will again be back to making profits from equity.
Okay. You are saying not to prepay a loan. And that's an interesting perspective. It is, in fact, what a lot of people advise. Can you break down why that is, though? And is it always true? For example, if you are in the first part of your loan and you're primarily paying back the principal, does it still make sense? And I'm talking about mortgage loans here, or home loans rather.
Yes, absolutely. So, Alex, what happens is when you have just about started your loan, for example, or you are in the first 3 years, then at that time, your principal payment is the least. Now, at that point of time, if interest rates are moving up, what happens is even lesser principal is getting paid. So in the earlier years, yes, you must make some prepayments. But even if you are in the earlier years and the interest rate cycle is downwards, then you are not in a rush to make prepayments. So just a simple rule of thumb is, if the interest rates are moving up, keep a prepayment budget towards the end of the year or whenever you want to, because you will be automatically saving your tenure, you will be reducing your principal. When interest rates are moving down, never be in a rush to prepay. Invest your money elsewhere, then use the profits from there, and that time come and prepay your home loan. So essentially, rates are going up, consider prepayment. Rates are going down, don't prepay. And ideally, prepay from profits of equity investments and other investments, so that you have your capital plus you are automatically also augmenting your loan downwards.
Yeah, that's good advice, because opportunity cost is what you need to bear in mind. What would you have done with the money if you had not prepaid? And this is a good point that Karthik is making. Now, the last part of this conversation, I want to talk to you about, Karthik, something that the Reserve Bank of India governor spoke about today. Now, there is RBI Retail Direct, which is a platform that they have started to allow investors, retail investors, to buy government bonds. Now, let's admit, it's not really taken off the way that it was initially envisaged, and people have not gone and bought government bonds themselves. People buy through either fixed income mutual funds or hybrid mutual funds which invest in these bonds. But now the announcement is that they're going to allow investors to buy treasury bills, which is any government paper that is less than 1 year in duration, on an SIP basis, which sounds interesting, but do you think that they'll be taken